Morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Wednesday, November 26th. This is pretty much the final day of the trading week. It's the last full day of trading. Tomorrow, the markets will be closed because we have Thanksgiving in the States. And then on Friday, we're going to have a half day. So the volume is just going to be relatively light compared to what we're going to see today. We're probably going to have some light volume today as well. But it is the final day of the week in terms of a full day of trading. Got a lot to talk about, a lot to get into. Yesterday was really important because we had a second green day in a row, and that followed up Monday's 1.5% green, which means we had 2.5% on the S&P 500 in the past couple of days, which made up for almost 50% of the decline that we had over the past month. So, I mean, it's been a relatively strong week. We are green in the pre-markets. Hopefully we keep up with that green. You got a couple of different stocks that are moving aggressively that we'll talk about as we start off the show. We have some Nvidia headlines, some Robinhood headlines. We got a bunch of different macro data in regards to jobless claims. But overall, what turned yesterday was the idea that we are more likely to get a rate cut. Rate cut probabilities are now at 83%. S&P 500 right there at 677. Nvidia fell 8% yesterday before rebounding, still down from where it was yesterday, but nonetheless, it hit below 170. And you just had a bunch of different things that came out that kind of shifted that narrative on Nvidia. We also had Nvidia respond to Google. So for those that didn't hear about the response, we'll go through that. And maybe, just maybe, we're going into Thanksgiving with a green week. And if we can reclaim 680 potentially on the S&P 500, that would be very exciting given the all-time highs are at 689. Webull as well, getting some love right here. Webull had a good earnings. I mean, they had a pretty good earnings. It took a while for the street to react to it. But right now, that's up 8% in the pre-markets. I'm not sure if there's another headline, but we'll take a look at that. But Webull is up 8%. The big story of the morning is Hoodie, which is up 5%. And so we'll start off with Hood and discuss what's happening there because it actually is some pretty big news. I saw the news last night. I thought it was important, and then I kind of slept on it, and I woke up realizing, no, this is really important. And that's why the market is giving this type of momentum to it. So we'll get into it as we begin talking. So yes, tomorrow is Thanksgiving. I will not be live on Friday. I'm going to be with family, so there will not be a market open on Friday. The markets do close at 1 p.m. Again, I think it's going to be very, very light trading volume. Already we're seeing light trading volume. But yeah, this is pretty much the last real trading day for this week. And then we have Thanksgiving for 2025. And then we end out 2025 in about a month. I still can't believe we are getting towards the end of the year, but nonetheless, we are getting towards the end of the year. All right, so let's get started. Let me do the green or red poll in the chat, see what people think as well. I know we were skeptical of this green over the past couple of days in a meaningful way. I mean, we should have been skeptical that we experienced last week, but maybe there's an argument that the momentum is back, and we'll talk about some of the different headlines and narratives and kind of broader macro thematics for why that narrative for the bull market. And potentially, I mean, you had JP Morgan come out today. You had some other banks say, hey, we still think 7,000 is possible. So we'll discuss if that ends up playing out. So someone says you have a different family other than us. Yes, I do have my actual family. But to be honest, if we were talking about this last night with Steve, we were going over what we were thankful for, which we'll talk about at the end of the stream. We'll do what are you thankful for? And honestly, I said the number one thing I'm thankful for is this community. You know, it really is a sense of purpose for me. It's thankful for his dentist. Dude, my teeth feel amazing. So yes, I'm thankful for a dentist who can do a really good root canal. But yeah, dude, my teeth were hurting so bad a month and a half ago. So I'm very thankful for that. But no, very thankful for the community. Very thankful for being here every single day. It is a blessing and privilege. I tell myself every morning to be able to do this and be able to express my thoughts and opinions and research that I'm compiling and give it to the world. And I really don't take it for granted. I try to make sure every day to not take it for granted because it is a very privileged position to be in. And without the audience, there is no show. There is no value to the community. There's nothing. So there's just a guy talking into his camera, which is still basically what this is. It's just a guy talking into a camera. Dude, if you recorded what my day looks like, if someone just had a camera on the wall and just recorded what I do, it's it looks hilarious because it looks kind of crazy, to be honest. But very, 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 very grateful that we are here as a community, that we are all able to deal with the ups and downs as a community. And All of us are trying to increase our financial independence at its core. That's what we're trying to do. We're trying to engage in content that is not content that fundamentally doesn't have an impact on our lives, but we're all talking in the chat, sending updates, looking at news because we're trying to increase the ability for us to have a better life. And usually money and financial independence is at the epicenter of being able to have a better life. And a lot of us, speaking of family, I think we're doing this for our families. So very grateful for everyone to be here today and to be here throughout the entire year. All right, let's get started. Let's get into it. Before I get into Robinhood, first, jobless claims. They came in better than expected. So this unemployment story continues to be an issue for the labor market, and the broader market is trying to figure out what's happening in the labor market, at least from a rate cut perspective. U.S. jobless claims fell to 216,000 for last week, the week of November 22nd. Consensus was 225,000. So this is good. It means we are not, again, when we weren't getting data, when the government was shut down, some people were thinking we were having 350 to 375,000 job losses a week, which would qualify as a recession. We're not there. We're not there. We're at 200. This is relatively tame. Quite frankly, this number is lower than the moving average that we had in the months of July and August, September, which was closer to 222,000 or 224,000. So the fact that we're at 216, 220, we're basically within the plus or minus 2% of the average is very good. It means the labor market is not deteriorating. Now, some people might be saying, well, that means we're not getting a rate cut. No, the labor market's still weakening, which is why the probabilities are 82.9%, but it's not deteriorating. And that's a very important nuance because if we are not deteriorating, we have a chance to save the labor market with rate cuts. Now, maybe AI is so powerful and it's going to lead to so many job losses that rate cuts can't do anything. That's a story for another day. We'll see how that plays out. But economically, there should be a world in which if unemployment's at 4.4%, we should cut rates before it gets to 4.9%, because inevitably it will get to 4.9%. And if we can delay that from happening in a meaningful way, then that would be important. So I think none of this changes the data in terms of how the Fed is thinking of the rate cut. Again, it's not guaranteed, we get it, but 82.9%, Jay Powell usually does not like to surprise the market participants. And now if the probabilities are at 80%, unless him or John Williams or Mary Daly or Christopher Waller come out and completely flip the script and say, no, I don't think we should have a rate cut, which all of them have been saying we should have a rate cut. Even the former Dallas Fed president yesterday came out and said, we should probably have a rate cut. Then it looks like we're going to get this rate cut. And that would be very important to continue having this momentum as strong as it is. So that's what we've got going on. And that is kind of the extent of the macro data. There's a couple other pieces of macro data we'll look at, but the jobless claims was the big one. And that's what we got this morning for Wednesday. Robinhood. Let's talk about Robinhood and what's going on. The reason Robinhood is up 5% right now in the pre-markets, and maybe this holds, maybe it doesn't. By the way, this is kind of my fair value for Hood. If we end out the year at 120, I will be a happy guy. I don't think we should be at 100 like we were last week, and I don't think we should be at 150. I think inevitably we will be much farther beyond 150, but I think there's still too much economic uncertainty, volatility. You don't know what 2026 is going to be like. There's a lot of different arguments for why we shouldn't pull forward that much of a multiple for Hood. But I think 120 is a very good sweet spot. And so I think if we can normalize this range, then that would be very important. Why are we getting that today? Well, Robinhood just gave a big middle finger to Kalshi. Last night, Robinhood expanding their prediction markets offering through a new joint venture with Susquehanna, which is one of the largest market makers in the world, to operate a CFTC licensed exchange and clearinghouse. Basically, they're vertically integrating the entire process of the clearing and the market making and liquidity for these prediction markets. And they're not completely off of Kalshi, but it looks like Vlad is tired of splitting those 2 cents per contract with Kalshi. Susquehanna will serve as a key partner in the initial liquidity provider, with additional liquidity providers added over time. Prediction markets are Robinhood's fastest growing revenue line, with 9 billion contracts traded by over 1 million customers in the first year. And the new exchange, which is essentially what this is, it's like a joint subsidiary under Robinhood that that Susquehanna is going to own a 10% stake of. It's going to operate independently as a joint venture with Robinhood as the controlling partner, providing retail demand and distribution. I've been waiting for this. A lot of Robinhood bulls have been waiting for this. I mean, prediction markets are growing more and more and more. This is a new $100 million line of business. I think in the next couple of years, it's going to be $1 billion line of business. Right now, I think Piper Sandler is estimating $250 million per year Robinhood is making on prediction markets, or they will make next year. Could be $500 million, but they give 1 cent to Kalshi. And what does Kalshi give them? Nothing. Robinhood has all the distribution. Robinhood has all the marketing. Robinhood doesn't really need to do the marketing. Kalshi turns into this cringe marketing machine with all these like horrible influencer campaigns because they have nothing proprietary because prediction markets are a commodity. But Robinhood has 27 million customers that have a very sticky ecosystem and user experience that would be willing to try a new product and are obviously showing that the volumes are very intense. So I think for Vlad, it's very obvious. Why would we keep partnering with another exchange? We did it in the beginning just to get things started, but there's no reason we should be giving them 50% of every contract just because we're using part of their liquidity from a market making perspective. So I think it's very obvious that the market right here is just saying, wait a second, if Robinhood can double those revenues, and I don't think it's going to happen anytime soon, but I think over time, you're going to start to see that 1 cent turn into 1.2, then 1.3, then 1.4, then eventually a full 2 cents per contract. And that's when the revenue from prediction markets pretty much has its S-curve moment, which actually counteracts crypto. Crypto has been dead for the past couple months, which means Robinhood crypto volumes going into Q4 probably are not going to be that good. That's also why Robinhood stock has been down, because crypto has been down. But if crypto is not the only 90% margin source of revenue, and you have this new thing called prediction markets that are actually way better for Hood, and they're making even more money than they're making on crypto with these prediction markets, which is not the case yet, but over time, if that is the case, that's not as cyclical as crypto. That's not as contingent on the whims of the Bitcoin ecosystem. That's just, hey, like people want to trade on the Super Bowl, so people are probably going to trade on the Super Bowl. If they want to trade on Robinhood, then Robinhood's going to capture a lot of that volume. So from my perspective, I think it's a really, really strong thing for them to do, and that's why the market is kind of pricing it in right here. Benny says, I bet the proposed acquisition price ask of MIAX, which is the exchange Robinhood is acquiring, was for a great price. Yeah, we don't have the acquisition price, but 100% agreed. I mean, usually when Robinhood engages in these joint ventures, they get a really good deal. And again, they're offering a ton of distribution. So Susquehanna, which at the end of the day, their job is to provide liquidity to all the different exchanges that are trading stocks, crypto, tokenized assets potentially in the future, now prediction markets. They just want volume. And if Robinhood can give them volume, then that's why I think they're going to get a lot more momentum. So that's the reason Robinhood is up. Now, the ideological opinion some people have about prediction markets being gambling, again, that's fine. People can have their own perspective on this. But the point is people are going to trade. And if people are going to trade, are they going to use DraftKings, Coinbase, Kalshi, Polymarket, Robinhood? If they're going to end up using Hood, then Hood should capture the majority of that volume. And for shareholders, that volume will translate into a lot of revenues and, quite frankly, a lot of profits, because Robinhood does not have a lot of overhead to run that type of business. So from that perspective, the market's pricing it higher, and that's why you're seeing that 5% move on Robinhood at the moment. Nvidia. Let's talk about Nvidia. So Nvidia share, wow, 180. We're actually getting a move here, up 2%. I didn't see us break 180 in the pre-markets. All right, 181 on Nvidia. I know a lot of you guys bought the dip at 169 when Jose came on the show. I got 170.80. First time in a while that I bought Nvidia. And I mean, I think a lot of us who took advantage of the dip yesterday, the number one reason was because this TPU thing is not going to be the end of the world for Nvidia. And I think we're starting to see the manifestation of that get priced in by the markets. Again, this is after the earnings. Nvidia is now trading at 25 times next year's earnings. It's not in the most bubblish of territories to me. But Nvidia responded. So this is what they said yesterday to Google. We're delighted by Google's success. They've made great advances in AI, and we continue to supply to Google. Nvidia is a generation ahead of the industry. It's the only platform that runs every AI model and does it everywhere computing is done. Nvidia offers greater performance, versatility, and fungibility than ASICs, which are designed for specific frameworks or functions. All right, so put in the chat if you hated this response, because I think it was 50-50. Quite frankly, it was probably 70-30, 70% of people hating the response, 30% of people being okay with it. I'm in the camp that it's not that big of a deal that they responded. I understand why people are annoyed, and they're just like, Nvidia shouldn't even be giving this any level of focus. And they responded to Michael Burry the other day, which, by the way, Michael Burry tweeted again this morning. Let me just say, getting into a beef with the world's most valuable company is one of the single best Substack growth strategies I've ever seen. Michael Burry this morning responding to NVIDIA's response. And then if NVIDIA goes back and forth in response to his response of the response, and then Burry has something else to respond to, I mean, I definitely don't think NVIDIA should respond to his part 2 of his blog post on his Substack where he goes deep into it, because like at that point, it's just becoming stupid. But they did send a memo to the sell-side analysts and they cited Michael Burry's claims. And Burry loves it because he's getting all the attention because a $4 trillion company is like, hey, this guy said this, and here's our response. And so everyone's like, well, who is this guy that said this? Why is he so important? Number one, which just increases his brand. And then 2, why do you feel like you have to respond if he is just some random guy? And I think NVIDIA, my take on this, and the reason they responded to Google yesterday as well, it's the same thing that Jensen did during DeepSeek. When DeepSeek happened and NVIDIA fell to $90 a share, they responded and they just said, hey, this is how we see the market. This is where we think the demand for inferencing and reasoning is going. This is why we think this is not that big of a deal. And I think Jensen has that dog in him. I really think he has that dog in him. And he's just like, you're going to talk shit about my company after we delivered the single best quarter in the history of the stock market. I think Jensen, quite frankly, I think he's pissed off. I think he's pissed off because the analyst wanted 61 billion. He said, I'll give you 65. The analyst wanted 49 billion of data center revenue. He said, we'll give you 52. The analyst expected 58.3% growth. He said, I'll give you 62.4% growth. The analyst expected 72% gross margins. He said, we'll give you 73.4. I mean, he did every single thing you could possibly imagine. And the stock is down 15% from earnings. And I think he's just like, you know what? If it's down because of freaking Burry and Google and the information putting out these reports that have no details, but these headlines are causing us to lose $300 billion in market cap on a day, then we're just going to respond. And people can say whatever we want, but we will have to defend ourselves in the midst of this. So I think that's why Jensen's responding. I can understand the perception of it being weak, but I can also understand him just being like, screw you guys. Like, we don't care what you think. This is our response. Take it or leave it. But the analysis from a lot of these people is just incorrect or insignificant or really misses a key point. And that's why I think NVIDIA is good. So I don't think they're doing it from a position of weakness, I would say, because the numbers do all the talking. But I think at the end of the day, if the numbers aren't leading to the market being convinced, then that's where NVIDIA might have to come out and say something. NVIDIA right there, 180.88. That's up 1.7%. Again, after those earnings, it continues to be one of the cheapest Mag 7s, along with Google and Meta. And now Microsoft, which is starting to get cheaper, even though Microsoft is now, wow, Microsoft up 2% as well. All of tech getting a little bit of a boost. Where's Google? Are we back to 330? Okay, Google's down 318. That's normal. It had a really big week. Amazon getting a move as well, 231. Meta is down because they're getting investigated by Italy. The Italian watchdog came out and said Meta's a monopoly again. So I think that's why. Otherwise, Meta probably would be pushing 640. Had a big day yesterday, up 3.7%. So you've got that Italian watchdog headline. Maybe there's another headline, but that's the one I saw. And that's why Meta's down. And you got Nvidia leading it, up 1.75% on the day as well. Amit, I think Jensen has been spending a lot of time with Carp, so it's rubbing off on him. Yeah, maybe. Because Carp will, dude, if Carp had a $4 trillion company and people were talking shit, oh my goodness. Carp has a $400 billion company, and when people talk shit, he gets offended. So yeah, maybe Jensen has been spending some time with Carp. But that's what we got from NVIDIA, and you're seeing all the NeoClouds, the Nebuses, the CoreWeaves, the Ciphers, the TeraWolves all get a little bit of a boost in the pre-market as well. Ciphers up 5%. Nebius right here back above 90. Wow, 93. Nebius 5% in the pre-market. CoreWeave is up 3.2, 73.64. And then IREN is up 3% as well. So as NVIDIA goes higher, a lot of the data center plays are getting some of that momentum as well. Ludo says, I'm Italian and I've got Meta Leap, so what are we doing? Yeah, I saw the headline this morning. I was just like, really? Because I looked at Meta. I was like, there's no way this is down this morning. And it's like down 2%. I'm like, how the hell is it down? I mean, you would think the positive momentum would be strong, especially on a pre-market where the S&P is up. And then you get this. Italy's, I was about to say Itali's. Oh, my goodness. If I actually said Itali's and didn't catch myself right there, if I actually let that happen, there would be hell to pay in the comments. And I should have let it happen for the hell. I should have let it happen, but I caught myself. Italy's antitrust authority said it has broadened the scope of its investigation into Meta over allegations of the company abusing its dominant position through the use of artificial intelligence tools on messaging service WhatsApp. Okay, so Italy is basically saying that WhatsApp is a monopoly and that Meta is like basically not allowing any other competitors to compete. I think it's kind of a nothing burger, but nonetheless, that's why that stock is down about 1% right here in the pre-markets. So overall, we're green. Overall, we're pretty damn green, and it is nice to see some of this momentum. I know we have low volume, but if that continues, then maybe we get some broader excitement going into the end of the year. I mean, can we all kind of feel the narrative shifting again a little bit? You know, this whole AI bubble, Oswald's going on podcasts last week saying that everything's going to pop. Apple's your only form of safety, yada, yada. And then it's like price action changes. People start realizing, wait a second, the earnings are real. You get more of a chance of a rate cut, and people start asking, maybe it's not a bubble. Now, maybe it is. I don't think we're out of the woods. I don't think it's a bubble, but I also don't think we're out of the woods. But maybe it's not as doomeristic as it was yesterday or as it was last week. Yeah, Tesla 424 as well. Tesla getting some momentum in the pre-market. And again, a lot of this is not just contingent on the market recognizing the earnings growth and the potential of all these companies randomly. I think a lot of this is also the fact that we're getting a rate cut. Like at the end of the day, we cannot ignore the fact that the rate cut and the liquidity that that provides is very important for a lot of these stocks, because at the end of the day, they are growth stocks. And once those odds shifted the way they shifted, and by the way, Nvidia is not even back to 200 or 197 on earnings. Nvidia is still meaningfully below that price. So I don't think it's like full on V shape. We've moonshot at Palantir still at 165. Like a lot of these names have not fully recovered. And I don't think they need to by the end of the year. But if they can somewhat get a little bit more of their footing and stabilize, I think that would be really good for a lot of people that want to go long on those names and continue to hold on to those names for the long term. We're going to see. We're going to see how this ends up playing out. Yeah, time in the bubble is better than timing the bubble. And then if it turns out to not be a bubble, then obviously the time that you put in is very important. Last thing on Nvidia right here. This is a Google DeepMind research scientist who works on TPU design at Google. This is what he tweeted yesterday. The sell-off shows how clueless the market is about hardware and demand. So you've got Google research scientists being like, he has no incentive. I mean, he has plenty of Google stock, I would imagine. Maybe he has some personal Nvidia stock, but I don't think he has a major incentive to be like, yeah, the sell-off of Nvidia and the uptick of Google makes no sense. It's like, no, he's just saying like naturally the market is underestimating the level of demand for this compute that is out there. And the fact that they're selling off the epicenter of AI and they think that Google's going to take over, which Google, it deserves its premium and it's doing very well and it should continue to do well and hopefully ends out the year above 300. But does it deserve to go to 5 trillion and Nvidia go down to 3 trillion because now Google's taken over the chip market? Like, probably not. And so I think that's what's kind of calmed down some of the fears of investors as well. Any take on the job numbers today? Again, I think the job numbers are okay. We looked at it this morning, 216 versus 222 expected for the labor market on jobless claims. It's in line with the historical average over the past 2 years, which is signaling no recession. If we get into that 300,000 range, that's where we get a little bit worried about recession. So labor market's weak, but it's not weak to the point where we have to be that scared. And I think that's also a really important thing going into the end of the year. Macro, okay, what's going on? So JP Morgan, we'll give two perspectives, one bullish, one bearish. JP Morgan says S&P 500, 8,000 in 2026 if the Fed continues to cut rates. In its 2026 global equity outlook, the bank forecasts double-digit global equity gains driven by strong earnings, lower rates, and easing policy pressures. The U.S. is expected to remain the main growth engine supported by a resilient economy and an AI-driven investment boom. JP Morgan expects 15% earnings growth for U.S. companies over the next 2 years and says high valuations are justified by accelerating AI capex, rising shareholder payouts, and potential policy tailwinds. The bank also warned that rapid AI disruption could amplify existing economic imbalances and lead to volatile investor sentiment. So basically they're saying, hey, we think it gets to 8,000, probably 7,500 by end of 2026, although it will be a bumpy ride. And the argument is Fed easing, AI trade, right? If you have to summarize it. Then Bank of America came out and said, we think the S&P 500 might barely be above 7,100 at the end of 2026. Bank of America forecasts 14% earnings growth, but warns that liquidity support is fading with fewer buybacks, higher capex, and limited central bank cuts ahead. It projects a 5,500 to 8,500 range for the index, which, by the way, if you're a bank and you have a lot of people paying you for your analysis and you say, well, it could be 5,500 or 8,500. I mean, like, what are we talking about here? Like you have one job and it's to predict. You might be wrong at your job, but to cover your ass by going from the low end to the high end, I don't know. That's a little too aggressive there. The firm expects a shift in market leadership, capex over consumption, blue collar over white collar, raising staples to overweight and lowering discretionary. On AI, Bank of America sees potential near-term weakness, saying monetization remains uncertain and rising power demands could be a bottleneck. Remember, Bank of America at the beginning of the year, and they stuck with this until July, said we would not get a rate cut. Ironically, before the first rate cut, they ended up saying, no, we're probably going to get a rate cut. So, I mean, again, I'm not just picking on them because they're bearish, but they have been wrong throughout the entirety of the year. And I think the argument right here doesn't make a lot of sense. They're saying that we're going to have 14% earnings growth. JP Morgan says 15%, but liquidity support is fading. So they're saying, hey, you're going to have bigger earnings, but you're not going to have the Fed on your side. And from everything we've been hearing about the Fed, even if Jay Powell doesn't cut rates for 6 months, the next Fed president likely is going to be Kevin Hassett. And if it is Kevin Hassett, he's lowering those rates. So like, I don't know if it's going to be the scariest thing in the world in regards to thinking about the Fed. We are likely going to get these rate cuts one way or another, and that will be your liquidity support, whether it's Kevin Hassett, Kevin Warsh. And so I think if you have good earnings and you have an easing Fed, you have a bull market. Now, the bear case is recession, which is contingent on labor market. So if that doesn't take place, then I think 2026 still ends up being decent. And that is what we got in the context of some of the macro. Okay, so let's talk about retail stocks. For anyone who looked at XRT, which is the retail ETF yesterday, it had its best day in 5 months. It's up another 0.5% right here in the pre-markets. And I think this is really important to understand because the consumer is broken narrative is being challenged a little bit. Abercrombie and Fitch was up 37% yesterday. Kohl's was up 42% yesterday. Best Buy was up. I don't think they were up as much, but they were up a bit. Best Buy was up. No, Best Buy had a great day yesterday. Best Buy was up 5%. And then the one that completely, I could not understand this, Urban Outfitters was up 15% yesterday after earnings, after being up 9% during the day. These are not your Walmarts, your Targets, your Costcos. These are niche retailers that sell $75 jeans. Best Buy is not necessarily a niche retailer, but still Best Buy, people have to shop for a lot of electronics for Best Buy to get that momentum over the typical places they could go, like a Walmart, a Target, an Apple, etc. So the fact that they're going to Best Buy and it's getting a 5% move is very impressive. And then you have the overall retailer ETF that's up 5%. Now, why is the retail ETF up 5%? Because it seems like all of the retail sales data we got yesterday, I think it was 0.2 versus 0.3% expected. So for September, so it was a little bit lower than expected. But at the end of the day, you put two and two together, people have to be buying things. Yeah, Burlington also had a great earnings. People have to be buying things with disposable income, especially at places like Abercrombie, which again are a bit more on the high end, for these stocks to go higher. And so it really begs the question, wait a second, we just heard all this, I guess, conflicting data from Chipotle, Starbucks, and Lululemon over the past couple of weeks that the consumer's struggling. They're not really doing that well. I still think that data is true, and I think it's hard to deny some of the other forms of economic data that we're seeing in regards to the lower-end consumer, particularly if you look at subprime auto, student loans, and credit card delinquencies, which are at like 11-year highs. But maybe Chipotle food sucks. Maybe Starbucks coffee sucks. Maybe Lululemon just doesn't have good hip millennial fashion trends because Urban Outfitters up 16%. Like, really? Abercrombie up 35%? That's the market saying, no, we think retailers are back and we think people are shopping. And if you get an easing Fed next year, if you get the AI narrative intact, if you get earnings growth of at least 13 to 15%, and you get the consumer potentially coming back, that's a really good setup for next year. So I'm going to take this data with a grain of salt, and I'm going to try to look at some of the other retail earnings that we have coming up. But I did not expect these niche retail brands to put up the types of earnings that they put up. Even Dick's, they beat it on the top and the bottom yesterday as well. So you're just seeing so many of these companies have a pretty decent earnings. Yeah, Dick's was up 2% yesterday. And that's why I think it's giving some more momentum. Here's an update and some coverage on what to expect for Black Friday, because we've got a lot more of the potential retail trade that's coming into the end of the year.
Gearing up for the most critical stretch of the year. It kicks off when Thanksgiving dinner winds down. Courtney Reagan joins us now with more. Where are you going to be on Friday, Courtney? That's always. I'm going
to be at a mall in New Jersey. Checking out the deals. Probably doing a little self-gifting along the way. It's a good time of the year to stock up. Just saying. Like you pointed out, Andrew, these next 5 days, really, truly the most important stretch of the year for retail. In fact, Adobe estimates about 17% of total online holiday spending will happen during this stretch, which is often called Cyber Week. But physical stores, they still remain a very big part of the equation, too. The National Retail Federation predicts 186.9 million Americans will shop in some form between Thanksgiving and Cyber Monday.
Put in the chat if you're a Black Friday person, if you aggressively look for deals. I tend to not really take advantage of it. My mom is. We're probably gonna have 50 Amazon packages after Black Friday. But put in the chat if you're one of those people.
more than ever before by their estimation. Now, shoppers tell Deloitte they'll spend 60% of their budget online, 40% in stores over these 5 days. Most retailers are not opening stores on Thanksgiving Day, but they will offer those doorbusters online. So Adobe expects that online sales will grow about 5% on Thursday. And even with the continual rise in online shopping, Black Friday still matters. Shoppers are motivated first by deals and then by tradition. Black Friday is forecast to be the biggest in-store shopping.
Bro, I'm seeing 80% of you guys say no. That's why this community is special. All of us are hoarding our cash to buy the freaking dip. I mean, like, in what world do 80% of people say, no, I don't care about getting a good deal on Black Friday? It's the people that are trying to get a good deal in the stock market. Like, it's just that simple. You got a lot of people that are just not in that consumer mentality in the chat. And that makes sense. We're trying to get a good deal in the stock market instead.
Day of the year, according to traffic counting firms Insermatic and Retail Next. Gen Z will be the most enthusiastic cohort. According to Deloitte, that group is now responsible for $20 out of every 100 holiday dollars spent. That is well more than the $4 they were responsible for out of every 100 last year. Adobe forecasts U.S. e-commerce sales, they'll grow 8.3% on just Black Friday, while Salesforce says Black Friday's actually already surpassed Cyber Monday in sales that happened last year. They think it's going to happen again this year. Now, retailers do save deals for Cyber Monday, and consumers know it. Possibly the best day to buy electronics, apparel, and computers, with total online sales expected to grow 6.3% on Monday. Now, consumers may feel less confident this holiday season based on economic surveys, but they're buying, even if, our favorite word in retail lately, choiceful, according to at least executives from Best Buy, Dick's Sporting Goods, Kohl's, Gap, and others. When there's perceived value, and that's more than just price, shoppers are motivated to buy. Andrew.
I mean, that's quite incredible. The fact that XRT is starting to get a move up here, and you got the earnings, and regardless of the stock price action, because yes, some of the stock price action on like an Abercrombie or Kohl's could have been a little bit more of a short squeeze. Those stocks were definitely heavily shorted. If you just look at their earnings, I mean, it's not crazy to think that the stock should be higher given the earnings were that good and they beat on expectations. And if that continues to be the case, then maybe retail and the consumer is not in the worst situation. So there you go. It's not a horrible setup going into the end of the year. We did have basically a Black Friday sale in the stock market over the past 3 weeks, and so I could understand a lot of people kind of allocating some capital to the markets instead. And maybe that changes. We got to see going into the end of the year. Maybe that ends up changing. We had Dell earnings yesterday. Dell announced a partnership with Iren, which I think was already known, but they kind of reaffirmed that partnership. Dell did beat on the top and the bottom. They increased their fiscal year guidance by $2 billion, and they increased their adjusted EPS by 50 cents. So it was a hell of an earnings for Dell, 5.32% on the day, 132.60 in the pre-markets, and they overall put up some relatively strong numbers for the street. And I think that was kind of one of the most important earnings of yesterday, at least in the semiconductor ecosystem. A lot of people are asking what's going on with Oscar. Trump clarified his comments on the healthcare stuff, and this is why Oscar fell yesterday.
Trading higher this morning.
We'll see what kind of offer they get on Monday. It's going to be an interesting Thanksgiving weekend for a lot of bankers. Meantime, President Trump saying he doesn't want to keep funding Obamacare health subsidies, but floated a possible extension of the benefits. Trump speaking with reporters aboard Air Force One as he flew to Florida for the Thanksgiving holiday. The healthcare subsidies were at the heart of the recent 43-day government shutdown, and premiums could spike for some Americans if Congress cannot reach a deal. On Monday, Politico reported the White House was working on a framework that would extend those subsidies for 2 years with some eligibility limits. So we'll see if things shift there.
So Trump didn't, the headline 2 days ago, which is why Oscar pumped, is that Trump is extending the subsidies. He came out yesterday and said he's submitting a framework that is not necessarily going to extend the subsidies. Now, the market doesn't seem to care. Oscar was down 10% yesterday. Oscar now was up 3%. So the market still thinks that some type of subsidy extension is going to be there, which is why the healthcare stocks are getting a bid. So if you're long those names, UNH is up, Molina's up, Oscar's up. I think you're going to be okay towards the end of the year when the official proposal comes out. Then a lot of the healthcare stocks will probably react to it. But if it's some level of extension, even if it's, based on whatever conditions that Trump wants to put on it, that could potentially save us from a shutdown. Because again, one of the biggest reasons we had the shutdown was because of the healthcare debate, which would be very bullish going into January, and it could help the healthcare stocks a lot. So we're going to have to see when we get those details going into the end of the year. Steven says, Amit, I work for one of the biggest retailers in the US. We're on track to get 180% bonuses. So the company's doing well this year. Wow. Dude, a lot of these retail numbers over the past couple of days have been surprising. Have been very, 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 very surprising. The potential date for the shutdown is January 30th if we don't get a deal. And I think healthcare is going to be very important in the context of what that deal looks like. But yeah, Oscar was down 10% after hours. So it was not down intraday, but the news came after hours, which is why Oscar was down. We were live on Technical Tuesday when we saw that news break. But the market's starting to price in that extension ends up coming in. But yeah, these retail sales numbers, again, it really was surprising. And if it continues to lift up to the upside, then, those claims of a recession and a weakening consumer, again, I don't want to say the consumer is not weak. I just some of these numbers are making you question a little bit more around the details. Trump tweeted this morning. I don't even know how to really analyze this tweet, but nonetheless, this is what he tweeted. There is a new word for a Trump Republican, which is almost everyone. Great policy is the key. Is it Tupublican or Tupublican? I don't know what type of eggnog he had this morning to tweet that, but yeah, that is that is one of the posts from the president this morning. A Trump Republican is his new argument. So that's what you got there. Let me share this video real quick as well. The founder, Ilya, of Super Safe Intelligence was asked about how his company is going to make money. This is a company that has a $32 billion valuation. And here's what he said. And you can attach any other caption you want to it. I like this caption about when your girlfriend asks why you're broke.
How will SSI make money?
My answer to this question is something like, right now, we just focus on the research, and then the answer to that question will reveal itself. I think there will be lots of possible answers.
How will SSI?
I think that's a relatively strong way to respond to those questions. So, I was really curious what his response would be. He did a very large interview. For those that know, Ilya is like one of the goats of AI. He's one of the original creators of ChatGPT. Left OpenAI for starting his own company. I was very confused when I reported on that back in February. I remember I was in California and I got the headline, Super Safe Intelligence raises $32 billion. I was like, for what? No product. I get that he's important, but $32 billion valuation for what? That's the stuff that makes me cringe. That's the stuff that makes me, I'm like, all right, the bears have a point. This is a bit bubbly. Why is an AI company getting a $32 billion valuation? I mean, if OpenAI, which is growing pretty fast, is seen as overvalued, this guy is not growing at all. There's nothing. There's no users. There's no product. Now, maybe there's really important research, but does that research warrant a $30 billion valuation? And then when he's asked about how you're going to make money, he's like, we'll figure it out. Which, again, there's plenty of people willing to bet on the guy to figure it out. It's just when you get those types of answers, it definitely makes you question some of the quality of these AI startups. Nonetheless, one thing that he did say in the interview that was really important is that he believes that LLMs are not going to get as much better as people think that they're going to get. And he thinks we need to have an entirely new approach to how we navigate the process of engaging in these increased additions of models. There's a lot of other people that really disagree with that perspective, and probably Sam Altman disagrees, which is why they broke up and he left OpenAI. But he thinks LLMs are a dead-end race, and he thinks there's a sort of different perspective on, how LLMs will eventually scale. Mark Newen from Fundstrat, he was on Fox this morning. Here's his argument. He still believes markets are going to be rather choppy going into the end of November.
Earlier, we've seen very good gains out of Alphabet, stocks like Apple that are breaking out to new highs. That's over 10% of the S&P, so it is very important. Tough for the market to go down if you have these two key stocks moving higher, but yet you do have Nvidia now selling off to the lowest level since late September. So it's important to differentiate, between different parts of technology. I don't see Nvidia slipping too much more. Their cash flow is going to be, about $90 billion. So that's going to be an increase of about 50% versus the free cash flow. Companies like Alphabet are actually projected a decline this year. So I think this is a temporary, alignment where, Nvidia has been weak, but I still think that it likely is going to have a pretty sharp rally between now and the middle part of January.
And you told clients that you still feel like the final 6 weeks of 2025 have the potential to show a rally, and that 2026 would be the more likely time for a lengthier decline. What are you expecting?
Yeah, that's correct. Look, I don't think we're necessarily out of the woods just yet with regards to the market. The market certainly is comforted when the chances of a rate cut continue to increase. And we've heard now that Hassett being the front runner, we've seen that the chances of a rate cut now go up to over 80%. So the market likes that. The market hates uncertainty, particularly with regards to the Fed. The closer we can get to a rate cut being priced in, the more the market will find comfort with that and rally. The problem is really this differentiation between the broader market and technology. We've seen financials, groups like discretionary industrials have really gone nowhere since July, whereas tech has rallied sharply. Now tech's correcting, and the other parts of the market still really aren't participating. We have gotten some good news in the last few days with regards to parts of transportation. The airlines are finally starting to move. We're seeing great movement out of the airlines and the home builders. Very good sign there. So I actually am optimistic that parts of discretionary and industrials are moving. I really want to see the financials move. That's the second largest part of the S&P, and so that's really going to be critical.
And that would be your broadening out thesis, which I would be okay with as well. If tech loses a little bit of strength, even though tech has lost a lot of strength over the past couple of weeks, and something else gains it, Eli Lilly, for example, and the S&P still makes its way to 7,000, I mean, that would still be a healthy bull market. It would be much healthier than if Nvidia went to 250. Although I do agree, I think Nvidia should be probably closer to 200 by end of year. But at the end of the day, what we've seen, and I shared this chart yesterday, 95 million options were bought last week. Last week was a gut-wrenching week. I don't have the split on calls and puts on those options, but it was the highest, it was the third highest notional trading volume, 3.5 trillion on the S&P 500 in history. What did people do? They bought the dip. I mean, this is still a buy the dip mentality that a lot of people have. And as a result, if we do end up having that buy the dip ecosystem going into the end of the year, although we might see the rally broaden, a lot of money might just end up going into tech. By the way, last stat before we get into the market open, we got about 30 seconds right here. JP Morgan, they said this morning, Goldman said on Friday and Monday, hedge funds logged their biggest 2-day buying spree in over 6 months, and one of the largest bursts of buying seen in the past 2 years. That came from Goldman's trading desk this morning. I mean, a lot of those options potentially might have been bought by hedge funds as they were continuing to take advantage of the dip. And if retail bought the dip as well last week, then you might have had some systemic algorithmic selling, but you might have had a lot of actual investors just say these prices are stupid, and they took advantage of the dip along with the institutions. All right, here we go. Thank you, everybody, for being here. It is Wednesday, November 26th, the day before Thanksgiving. Very, very thankful and grateful for everyone being here every single day. The stock market is now open. All right, wake your ass up. Nvidia, 181.49. 181.49. That is green on the day, up 1.882% on Nvidia. Abercrombie, that continues to go green. CoreWeave, that's up 5%. Nebius, up 6%. Meta, even though they got a warning from the Italian watchdog on antitrust violations, which is why the stock was down. It looks like it's starting to get a little bit more momentum. 636 right here. Meta's now going green. Robinhood up 5.3%. We had some big news in the morning about Robinhood basically vertically integrating into their own exchange for prediction markets, potentially not getting rid of Kalshi yet, but not needing Kalshi in the future. And the markets are very excited about that because it means they're going to make a lot more per contract on these prediction markets. Robinhood right there up 5.2%. Microsoft's up 1.3%. The S&P 500 up 0.5% on the day. Wow. 678 on the S&P. Shout out to Nubank. Incredible stuff. I know Tanner's been buying this thing since $3, so shout out to him. $17.26, up 3.9% on the day. That is new all-time highs for Nubank. Iren right there, that's up 2%. BM&R getting a move as well. That's up 4%. You got BM&R making a move. Cisco's up a little bit. Arista's up a little bit. Duolingo's up 1.49%. Where is the lab of Rockets? Rocket Lab, that's up 0.32%. ASTS is at 55.89. That's up 0.5%. Nvidia, 182.20. That's up 2.4%. Palantir, 165.79. That's up 1.2% as well. Seeing a lot of those names get a little bit more momentum. Google basically going green. I mean, it's still red because it's down from yesterday, but 322 basically flat. Another $1 and that goes green. So nice to see Google holding on to the 320s. Webull up 7%. Pretty good earnings. I don't know if there was a headline on Webull this morning, but it looks like a delayed earnings reaction. So Webull getting some love right there. That's up 7%. Ethereum trying to crack 3,000. It really tried last night. Got all the way to 29.84. Was not able to crack it. But it is trying. Bitcoin right there at 87,260. Again, volumes are going to be light today. So you might see some price action that is a bit weird up or down. But you do have a lot of people that are just traveling and probably not going to be trading today. Micron, 230. This fell all the way to 200. This fell all the way to 200 last week. And Micron's getting some love back. Tesla, 423. Tesla was at 380 last week. Again, a lot of these stocks were on sale. And it seems like people have taken advantage of it. AMD got to 195 yesterday after that Google news. AMD right there at 210. Now, AMD is a long way to go before it rebounds back into the 260s, but still a pretty nice move rebounding from that 195 level. Chipotle's up another 1/3%. McDonald's is up today. Kohl's and Abercrombie continue to make a move. Wow, Abercrombie up another 4% after being up 30% or 37% yesterday, which is exciting to see. How about Open Door? That stock is down. We might have had some housing data that's affecting Open Door. We'll check that in a second. Dell had a great earnings. That stock should be up. Dell is indeed up. That's about 4.12%. Hoodie, wow, 6.5. I think the markets are really liking this prediction market news. And it doesn't mean Hood is still not going to be volatile with the overall nature of the bull market, crypto, etc. But it does mean they're getting a revenue stream that really doesn't matter if the market's up or down because people are going to spend. Or people are going to speculate, I should say, on sports. That's an industry that's been around for a long time, and we have a new way for people to participate in that industry. And sports are going to happen every year, no matter if the economy is bad or good. So, I mean, you do have a line of revenue that potentially could be $1 billion line of revenue in the next couple of years, and I think that's how the market's pricing that in. Nvidia right there, 182.40, high of days. Nubank at 17.18. Oscar, look at that. Looks like the market really thinks this ACA subsidy extension is going to happen. That's up 8% on the day. Best Buy is up another 2% on the day. XRT up another 0.5% after having its best day since May yesterday. And then Nebby is getting a bit of a red candle, 94 to 91, but that's still up 2.5% as well on the day. Triple V, thank you for the $200 super chat. I will be getting dinner today with Mr. Triple V in New York City. Steve will be joining us. So that will be that'll be a fun discussion. Steve, I told Steve that Triple V listens to us all the time when we're on the show, and we'll see what topics we can get into, what debates we can end up having. I think it'll be a fun time. So looking forward to seeing him today, and it'll be nice to get some medium steak. By the way, guys, I'm not a medium well guy anymore. I've transitioned to medium. Steve was shocked yesterday, but I've transitioned to medium. So I'm not a medium rare guy. I still think the steak should be cooked and like it shouldn't literally like be blood red pink in the middle. But I am a medium guy now. Palantir right there, 165. Nvidia still holding 182. Urban Outfitters up 10% on the day. Someone said congrats. Yeah, I am getting a little better. But some of these retail names still holding on to their momentum. CoreWeave's up 6.5%. Reddit goes down after Reddit was up 13% yesterday. Reddit getting a little bit of a move to the downside. And then Duolingo actually breaking 80 or 180 as that one is green. AppLovin, how about that one? AppLovin almost back to 580 at 569. That's up 2.4% on the day as well. All right, so I mean, even on relatively light volume, Nvidia, I think, having a little bit more volume than expected. 23 million shares in the first 5 minutes. Average volume is about 195 million shares. You are seeing some good price action across the board. We're not seeing any crazy red candles. Again, anything can flip at any moment. Algos can come in and get a little bit more excited, but you're not seeing that flip, at least at the beginning of the day. S&P also holding on to a 0.5% move. Even PayPal, look at that. It was almost green. It was 60. You know, dude, look, I don't love PayPal as an investment, but my goodness, is this thing going to go lower? Like, is anyone really going to lose money buying PayPal at $60? Like meaningfully lose money? Like, I don't think so. Then again, the opportunity cost, if you go heavy into it versus even something like Nvidia, which one could say is more risky, but definitely has a lot more upside baked into it. But I don't think they're taking PayPal to $50. Like maybe 55 at the worst. I don't know if they actually take it down that low. Carnival Cruise, that's down a little bit. SoFi trying to push 29. That's green. I would definitely, if I had to pick between SoFi and PayPal, I'd pick SoFi. But I just feel like the bottom hopefully is in for PayPal. BABA right there, that's up 2%. They had a great earnings yesterday. TSM, that's up. Like TSM getting sold off yesterday was also stupid. Like a lot of these chip names that got sold off yesterday made no sense given how pivotal they are in the supply chain ecosystem, regardless of who's going to be the winner. And so you're seeing some of those names start to recover as the sell-off was a bit aggressive. Grab right there is at 525. That's green. SanDisk up another 3% on the day. Circle, that's up. Amcor, that's up 1.72%. Then Nvidia trying to hold 182. Kathy Wood did buy Google yesterday. And again, I deeply respect Kathy, but just like sometimes the timing of their buys are very weird. She bought 174,000 shares of Google. She also bought CoreWeave, Meta, Hood, and Square. She sold AMD 106,000 shares, GitLab 358,000 shares, and 354,000 shares of Palantir. I don't hate the Google buy. It's just, literally it's at all-time highs. So I guess they think it's going to 350. But you would imagine they would wait, but it doesn't seem like they waited. And so they bought some more Google, 319, Google down about 1.2% on the day. Wow, Hoodie. Is she really going for 120? No, she touched 124 already. She actually touched 124. There you go. That's a pretty incredible. Again, if we can just normalize this range towards the end of the year, I'd be happy. Obviously, there's room for upside if we continue meaningfully moving higher in the broader bull market. But I think this 120, 125 range is a meaningful range for Hood to be in. Nubank right there, 1722. That's still up. And then Nvidia holding on to 180. Tesla, does Tesla go red? Tesla goes red. All right, so you're starting to see some of these names sell off. Tesla and Google, the first names to go red. Meta just went red again. Amazon just went red. All right, so 4 of the Max 7s go red. Do we have a candle on Nvidia down? Nvidia was at 182. It's a red candle, not that aggressive. Nvidia is still up 2% on the day. But you do have some red across the board. How about Apple? Apple hit 280 yesterday. Apple 277, that's holding up. And then Microsoft 42, that's holding up a little bit as well. All right, we're going to have to see. We have a long day. Hopefully we end up green before Thanksgiving. There you go. Robinhood back to 124. But a lot of these names are holding up. Now, again, Robinhood tends to move with a lot of other categories. The fact that Robinhood independently is up 7% on the day indicates that this prediction markets thing is being priced in pretty heavily. And it seems like that's what the market cares about more than crypto price action. Amcor, that's up 1.4. Figma, that goes down. Coinbase is up 1.4% on the day. TQQQ, which, by the way, IBKR put out their top 10 stocks that were traded yesterday. Retail continues to be heavily excited for technology. So the top 10 stocks were Nvidia, Tesla, AMD, Palantir, Meta, Google, TQQQ, QQQ, Amazon, and then SOXL, which is the triple leverage semiconductor ETF. Again, when things get ugly, the money seems to go to safety. At least we've seen some of that rotation, but a lot of that money seems to be going back into tech and just leveraging up on that tech exposure. Which is kind of wild because we only had a 5% drawdown. Imagine if we had a 10%. Like, would people really heavily just like if things like if Nvidia got to 150, if it didn't just stop at 169, I wonder if that would be a moment of legit panic for people, or if retail is so trained on this buy the dip mentality and so convinced of this AI revolution that dip would seem like a miracle for a lot of people. And they'd be like, thank goodness, I've been waiting for this for a year. And they would buy the dip. And if that happens, we'll see. But at least over the past week, we got a hint of it. And people bought the dip. Even though a lot of these stocks are still down from their highs. Is there any news on Hood? Yes, Hood is basically making their own exchange for prediction markets. That's the big news that came out yesterday. And so this is not just a random recovery that Hood's having. And quite frankly, this news could be a sell the news as well. But as of now, it's a news that's getting bought up. They're working with Susquehanna Group, which is one of the largest market makers in the world. And they're creating a new joint venture to operate a CFTC licensed exchange and clearinghouse for their prediction markets. And that's why that stock is green. Economic data. Do we have PMI? Let's see. Or do we get PMI soon? We are going to get PMI in 4 minutes. Okay, so we'll get PMI in a second, and we'll see what that looks like. We got the jobless claims this morning. Again, it was lower than expected, which is relatively good. Rate cut probabilities are still at a healthy 80%. So the market is still pretty excited about that. Talked about JP Morgan, talked about Bank of America. Oh, there was a really big piece of viral content yesterday that came out as well. Actually, let's listen to this Sundar clip before we talk about that, because that's a little bit of a deeper topic. But here's Sundar talking about data centers in space.
I'm constantly thinking in that time frame. One example of this is Project Suncatcher 2 weeks ago, where we announced we're going to build data centers in space. Obviously, it's a moonshot. Some of it looks crazy today, but when you truly step back and envision the amount of compute we are going to need, it starts making sense, and it's a matter of time. And so, how do you make progress on that? You work back and have 27 milestones, and get underway. So in 2027, hopefully, we'll have some TPU somewhere in space. Maybe we'll meet a Tesla Roadster, which is going around there too.
That's kind of crazy. You got people saying it's a bubble, and then you have the CEO of a $3.9 trillion company saying, yeah, we're going to have TPUs in space because we're going to need so much compute demand that we're going to have to go off this planet to be able to build these data centers. And here's another clip of Sundar talking more deeply about their strategy on Gemini 3.
Historically, like other than maybe your Gaia or your Google account, there wasn't this through line across like this whole suite of different products that Google has. And now it feels like Gemini is this through line across literally every single one of our products.
I think Gemini to me is like a very clear manifestation of what is the AI first strategy.
Yeah.
Because now you have something tangible like Gemini, and Gemini, you're right, improves everything from search to YouTube to cloud to Waymo. What I loved about the Gemini 3 launch, we shipped it across many of our products, but it was fascinating for me to see, on X, it could be Copilot or Replit or Figma, people all coming together. They're also sim shipping.
Yeah.
Right. And to me, that's innovation at scale, right? It's not just us. It's other companies in the world. It's been extraordinary to see.
Sundar is having his moment. He is the guy when it comes to AI right now, and he is having his moment. Nvidia right there, a little bit more of a red candle, 180.9 as that goes down. Google's trying to go green. Wow, hoodie. Market really likes this news. Market really likes this news. 125.77 on the day. Oracle, 5% as well. Wow, 5% on Oracle, back above 200. 185. 350 was aggressive on Oracle, but 185 was also aggressive to the downside. So it looks like it's trying to normalize around that $200 range. UNH, also a nice green candle right there. Same thing with Oscar, as UNH is up 2.5%. Rich Buddy says, would you sell into this market momentum? Can you do a poll on that? Yeah, let's do a poll on that. I think that's a good question to ask. So the question is very simply, we've had so far as of 9:45 on Wednesday, November 26th, 3 days of green. Maybe things change by the end of the day, but we've had 3 days of green. 83% of you said green. Simple question. Are you taking profits into this green? Even if you're not selling everything, obviously, if you're just trimming, you're de-risking a little bit. I mean, look, I think it's a fair question to ask. I just based on what we talked about in the morning, the rate cuts are coming more likely than not. We did a lot of analysis and we've had a lot of ups and downs and twists and turns on it, but it looks like the rate cuts are coming. Earnings growth continues to be strong. A lot of these stocks are still down from where they were at the highs, which I think is a good thing. They don't all need to go back to the moon anytime soon. And these retail sales are now challenging the narrative around the consumer being in a horrible position. So then the number one thing that I think would lead someone to be really cautious right now, outside of liquidity and rate cuts and labor markets, which again, potentially are resolved if we're going to get this rate cut, is this Michael Burry versus Nvidia argument about AI being a bubble. And so, I mean, I didn't sell over the past couple weeks. I'm likely not selling into this. I think this is a pretty good setup towards the end of the year. Maybe I'm dead wrong, but I'm not selling Nvidia at 180. Like I'm not doing that. When you look at their earnings, it's like, no, that doesn't make any sense. Robin is kind of a forever hold for me. Same thing with Palantir. Now, if you have some swing trades, then yeah, maybe like, if you bought something on the dip and you're kind of like, yeah, I think that, sure, some profits can be taken there. But a lot of these names, if they're re-rating, wow, S&P 679, if we can get 680 today, that'd be a big deal. If a lot of these names are not re-rating, but getting back to their sort of narrative that was strong before, then I don't know if it's a easy thing to do in terms of selling into the strength. But obviously, if the volatility of last week was too much, and if we revisit even a part of that going into December, which is very possible, you might get a hawkish cut by Jay Powell, you might get Trump that tweets something, you might have some China issue, like anything could happen, and you just want to have some more cash, then this is the time towards the end of the year where people start raising cash. I just wouldn't go net short and get out of the entire market if that's the intent of the question on should you sell. Nabius right there, that's up 7% on the day as that one continues to go green. Corey right there, 75.37, that's up 5.6%. Apple at 277, Nvidia still at 180. S&P, are we touching 680? Not yet, 679.05. 679.05. I trimmed some Google. Okay, that I understand. So yeah, I should caveat with, like, if a position is up a lot in a short amount of time, I mean, yeah, taking some profits here is not crazy. But then again, to hedge against that argument, Google's doing everything right. And I don't think anyone's saying Google's like now overvalued. Is it cheap? Is it as cheap as it was a couple months ago? Obviously not. Is it like egregious? Is it like Tesla 200 PE? No, not even close to that. So I can understand someone saying, I'm not selling my Google. I'm holding this on for a very long time. Not, like, why would I get rid of it here? Unless you think it's like just overextended. But in terms of just getting out of the market at these levels and being done for the year, I don't know. You'd have to get a real sort of bearish case going into the end of the year. PMI, let me pull this up. Let's see what we got right here. I think it's a beat. Chicago PMI. Okay, here we go. Let's pull this up and see what we've got.
And it's not very good. This is a November read on Chicago PMI. We're expecting a number above 40. We end up with 36.3.
Okay, that's a miss. That's a miss. That's another reason. That's probably why we had some red candles right here. That is another reason we probably need some rate cuts. Rate cut probabilities just went up. Slightly went up to 83 from 82, but they did just go up.
That would be the lowest level going back to May of 24. It's now been 2 years since we've been above 50 or expansion territory. November of 23 was the last time we were over 50. So Chicago manufacturing doesn't seem to be doing very well, but that weak read is definitely pushing yields up a bit, which really makes one scratch their head. We do see the stock market also responding in that vein. Now, granted that this may bring it an ease, so I understand what the stock market's doing, but I think on the side of interest rates, it's multifaceted. Maybe it's the runoff of the pricing, potentially pricing in of asset, which pushed yields down yesterday.
So going back to the question of do you sell, I think that clip is emblematic of the psychology here. We just got some bad news, pretty bad miss on Chicago PMI. Market's higher. Robinhood's up, Palantir's up, S&P's up. Why is the market up, even though it had a little red candle? Because we're going to probably get that rate cut. We're probably going to, I mean, I think, if anything, it really solidifies the idea of a rate cut. Do you want to go into 2026 knowing we will probably get some weak economic data? It's inevitable given all the signs that we've been seeing. Maybe not horrible, catastrophic data, but definitely weaker data. Knowing that bad news will inevitably be good news for the market, S&P high of days right here, because we're going to get the Fed easing, which is really good for risk on assets. Or do you think the weaker economic data will inevitably lead to bad earnings growth? Because if people don't have their jobs, if PMI is lower, if we're contracting, not expanding, then overall economic activity is going to be down. And that means a lot of the earnings multiples that we feel comfortable giving are going to start to compress. And as a result, stock prices are going to go down, even if we get rate cuts. I think that's the question you have to ask yourself. Will the economy lessen to such an extent in 2026 that the rate cuts will not be able to save it? And if you really do feel like that, then yeah, selling makes sense because you don't want to be around for the multiple compression, because if the earnings don't live up to the hype, then obviously these earnings are going to get compressed. S&P is trading at the highest multiple in history, or at least it's not at like 2021 levels, but we're still, you know, pretty much up there. But if you think it's not that bad and the rate cut's going to be there and the earnings growth are going to continue, then that is your bull case for 2026. BM&R making a move right here as well, 6%. Ethereum's not moving like that. So Ethereum is basically flat on the day. BM&R kind of recovering everything that it lost yesterday as well. All right, so you're seeing some of these crypto plays get some momentum. Jay Powell will be live on December 10th. The FOMC meeting is honestly in a couple weeks, so it'll be happening pretty soon. And we'll find out kind of how he thinks of the market. Then we're going to get jobs data going into the end of the year from November, which will also be really important. Yeah, BM&R getting a little bit of MNAV expansion here, as it's had a couple of days this week of expanding much higher than what Ethereum has moved at. Robinhood up 8.29% on the day. Street really likes this argument around prediction markets. Best Buy's up, Kohl's still up another 5%, CoreWeave's up, Nebia's still up 7%, Iren is up 2%, Weeble's holding 5%, Bitcoin 87,000. And then you got CleanSpark, which had their earnings yesterday, pretty good earnings as well, as they've transitioned into a AI HPC play. And that stock making a move up 9%. Not that crazy. Not that crazy to see some of the moves that we're seeing here, even with relatively lower volumes on a day like this. Let's look at the heat map for the day. Wow, the only thing that's red in tech is the Googs. Look at that, dude. Eli Lilly is taking a little bit of a breather. It's had a good week. ServiceNow is down. Salesforce is down. Meta's down a little bit. Amazon, Tesla is slightly down, but everything else, pretty damn green. Ondas as well. Yeah, Zscaler. I don't know why Zscaler's down. We looked at their, I didn't go that deep into their earnings, but they beat on the top and the bottom, down 10%. Not sure why the street was upset about their numbers, but there's something that's going on there. That one down about 10.4%. Nvidia right here at 180. I think Grab is waiting for the extraordinary general meeting for GoTo on December 17th. So if you've been following the story, the GoTo CEO, he got ousted a couple of days ago. They're replacing him with a new guy. That new guy is SoftBank's pick. SoftBank has a stake in Grab and GoTo. It looks very likely. I mean, we don't know if it's going to happen, but it looks likely that an acquisition is getting ready to happen. And I think that also is explaining a lot of the dark pool orders that we've seen over the past couple of days of like 30, 40 million shares. So that meeting is on December 17th. We're going to get a lot more data on what happens for the trajectory of Grab, but that will be very important to see if consolidation in that region ends up playing out. S&P, bit of a red candle right there, 679 to 678. Why did they get rid of him? Because he was opposing the takeover. And so SoftBank was like, your stock has been negative for 5 years. We need a return. Grab is obviously the winner here. They're the ones that are now profitable. They're the ones that have their stock up 60% over the past year. So yeah, we're going to need you guys to come together. I think that's what happened. I think a SoftBank representative came to the boardroom and he was like, we're either doing it my way or the highway. And we own a lot of shares in your company. So you can either listen to us or the stock is going to zero. And that's how it happens. That's how it happens. Nebius, are we getting a move right here? That is up 5%. Wow, that's a headline. Apple iPhone shipments to beat Samsung for the first time in 14 years. That is consistent with what we saw from Bernstein that was putting out some data 2 weeks ago about iPhone 17 sales. Dude, that's crazy. Apple iPhone shipments to beat Samsung for the first time in 14 years. Apple is set to ship more smartphones than Samsung in 2025. This will be the first time it will have done so in 14 years. 243 million iPhone units likely to end up with 19.4% of the global smartphone market versus 18.7%. Well, I helped them by buying an iPhone this week or last week. But I mean, my sister, by the way, she was telling me yesterday, like she upgraded from an iPhone 15 Pro Max to the iPhone 17 Pro Max, and she thinks, I mean, there's just a remarkable difference. Now, granted, it has been 2 years, but she's like, dude, the 17 is legit. Like it's like unbelievably fast. And so that, along with the broader super cycle of upgrades, especially in China, could be leading to that excitement. Okay, Nvidia gets a red candle. There you go. Dell's getting a red candle. Oracle's getting a red candle. All right, a little bit of whipsaw to the downside. They're not going to let us go to Turkey Day without a fight. Little bit of a whipsaw here on the red. S&P still green. Where's Hoodie? Yeah, even Hoodie, 125 to 123. There you go. Down 7%. Dude, I got to show you guys this video. I was watching this video the other day on YouTube of this like proprietary trading firm in New York, and they were like making some vlogs of like the interns and like how they train them to trade. It's kind of crazy. I'll show the video later, but it's like you literally see just the guy at his desk with a headset looking at 7 screens, and he's just like trading, and he's looking at all the same news that we're looking at, and he's putting in orders, selling, executing, but he's doing it professionally for a trading firm. And it's kind of crazy because there are professional people that literally do not care what the stock is. They just want to know, do we think it's going up? Do we think it's going down? Do we go long? Do we go short? How do we get in? How do we get out within sometimes seconds, sometimes minutes? And how do we make money? Like for a lot of people, they are not emotionally attached to Apple, but they see that Apple headline around beating Samsung, and they're like, okay, cool, bullish, buy some, and then we'll get out pretty soon. Yeah, SMB Capital. That's the name of the firm. If anyone wants to look it up, SMB Capital. It's quite interesting because a lot of them are reacting to the same news that we are reacting to. They're just, professionally trading it. I'm sure a lot of you guys do that as well as you're watching the stream. No, he was not watching AK Media, but they were talking about the same headline. I think this was like a July vlog they did, and so they were talking about Palantir, they were talking about SMCI, they were talking about Tesla, and it's just crazy because it's like the same stuff we talk about every day. Amazon right here, 229. That one basically losing all of its momentum as the rest of the market also starts to sell off a little bit. Fear and greed just hit 19. So we are well above 6, like we were at last week, but still at 19. Thoughts on ASML being a top pick? Who is what firm said ASML is their top pick for next year? I mean, I don't think I hate that. These guys have a monopoly on lithography, so there's not that many people competing with them. It's just their earnings have been kind of wonky, which is why they got hit all the way to 650 earlier in the year. JP Morgan. Yeah, I don't hate. This is a company that really does deserve a deep dive, and I would have to commit a good 2 weeks to learning about this company in depth because I do not know how to explain lithography that well. But there's not that many companies that engage in it either, so I can understand why ASML is a top pick just based on its pure ability to have a competitive barrier to entry. S&P continues the red candle, 677 as that one goes down. Thoughts on Uber? I think Uber's cheap at these prices. I think Uber just like, look, Uber's cheap. I think Uber's narrative with the robotaxi stuff has been annoying. It's not stopped it from having a good year, but I feel like it is stopping it from having an explosive year because you could argue Uber is relatively undervalued here. It's just every time I think it makes a run, you get robotaxi news and the market starts thinking, well, we know that robotaxis aren't coming anytime soon, but do we really want to buy Uber knowing that they might not be a full leader in the space? And that's where I think it starts selling off. But it's cheap. Uber trades at 3 times sales. I mean, this is not like the most expensive tech stock in the market, especially after the drawdown from 97. S&P 500, 677. Apple just went red on the day. Lyft actually has been a better stock this year just because their free cash flow margins have been better. Lyft is up 2% of the day. But Uber is obviously a much larger company. McKinsey's Agents and Robots US report says today's AI and robotics could technically automate 57% of US work hours if companies fully redesign jobs around them, worth up to $2.9 trillion a year by 2030. Okay, so Anthropic came out with a research report similar to this headline from McKinsey that said that an analysis of 100,000 Claude conversations showed that 1% of labor, 1.18% of productivity could be increased, which would be double the amount of the largest increase we've seen in the past 5 years, which was back in 2019. And that could automate a job that is equivalent to paying someone $54 an hour. I think if we actually start to see the ramifications of AI replacing those types of white collar jobs, and again, you're going to see a lot of productivity and earnings growth, but you might also see a lot of layoffs as well. So that's going to be the nuance that I think the market's going to have to navigate. Okay, is there a headline for some of the red? Let's see if there's anything or if it's just 10 a.m. normal shenanigans. Maybe PMI. I mean, we did pump on PMI because it was good news is bad news, but maybe we could be going the opposite direction as well as the market's digesting it. Oil prices are relatively stable. Ukraine stuff. Zelensky is meeting with Trump, or he's going to be meeting with Trump soon. Trump tweeted yesterday that there are some key points of disagreement, but overall the consensus is there. The Washington Post reported that Russia is likely to definitely reject this proposal. So you don't have any full stability there in terms of what's going to happen, but maybe some progress is being made. Let's get an update on jobless claims as well. They were lower than expected, and that helped rate cut probabilities this morning as well.
Unemployment claims that Americans file from last week. And actually, we had good news there, which was it was lower than expected and actually matched the lowest level since February. 216,000 jobless claims filed in the week of November 22nd. Better than the 225 expected. So 4-week moving averages ticks down if you want to smooth it over. So it continues to be the low hiring, low firing economic environment. And yes, there's been a lot of angst around the labor market lately with some of the alternative data, the ADP data that we've been tracking sort of on weekly job losses. But jobless claims, as filed by the states of Americans filing for those benefits, continues to paint a picture of lack of layoffs. And that's it just continues with this mixed picture that we are getting on the economy. Some good signs, some not so good signs.
Yeah. I mean, continuing claims are still near a 4-year high.
For sure.
And challenger layoffs are up 60% year on year. I'm not sure how we can call that a no fire environment.
No, I mean, it's mixed. There are mixed reports on it. Challenger, first of all, has always tended to be a little negative. But yes, I agree. October was really bad in terms of those layoff notices. It's not showing up in the weekly unemployment claims in terms of any kind of elevated number of layoffs there. And I think that it jives with what we're hearing from companies, which is if you are providing, what consumers want right now, then you're selling it at full price. I mean, did you hear what Urban Outfitters said? Yes, they said customers are looking for deals, but they also said that, that when they have the right assortment in merchandise, they're doing pretty well. November traffic and sales remain robust. We have observed a slight shift in consumers' behavior. We believe customers were waiting a bit longer this year to make their purchases until seasonal promotions began. So again, the deal, the choice, the priorities, but they're still buying. And Urban has discounted less than it has in previous years. And that's one thing that's actually helping the company. This is a stock that's up 90% over the last year. And it's not the only one. If you look at Tapestry, if you look at Ralph Lauren, some of these retail stocks have been doing very well. It doesn't happen when you have a weak consumer environment. It does happen when you have the upper income doing better and when you are really nailing it when it comes to what consumers want. It's not universal. The restaurant stocks are telling a completely different picture, which is weaker spending pretty much across the board. Just look at some of the index here or some of the names in this group. It's not a rising tide lifting all boats in consumer discretionary right now.
No. And if you look at retail sales, inflation adjusted last month was lower last month than it was in September of 21, right. I should say.
Because we still have a little inflation, which gets factored into those numbers, which are still growing. But to your point, the spending is growing because part of the higher spending is
The price increase.
the higher prices that we're seeing. I mean, if you HP, I mean, demand, not necessarily consumer, maybe more of a barometer for enterprise demand, but also individuals on PCs and printers. America revenue is flat in constant currency, reflecting demand softness in North America, particularly in commercial. I mentioned the restaurant stocks, the hotel stocks as well. They've been okay lately, but they've lagged other parts of the consumer, like casino stocks. I don't know if you've noticed that. So there is a real divergence here on where consumers are spending and what the market is telling you on what they're choosing. And how David Rosenberg took this up this morning, saying, you know, maybe with the increased affordability concerns and the higher cost of living, they're spending less on certainly restaurants, a little less on vacations, but
that is a real divergence. So hotels, flights, and casinos catching a bid along with these retailer stocks, like a Kohl's or Abercrombie. But then you have the food stocks. You're obviously seeing the sort of cautionary spend by consumers in a different place where they might not be willing to pay $15 for a burrito. And, you know, as a result, you're seeing a little bit of weakening in certain areas and not any weakening in other areas. And so if anything, it muddies up the picture on the state of the consumer, but it doesn't paint a full-on black or white narrative that the consumer is absolutely horrible, which is good, because the consumer not being horrible is a good thing for the broader markets having the ability to continue earnings growth. Doug says, Amit, you made a comment earlier saying that retail believes in the AI trade. I submit they have no choice. If AI is coming for your job, retail has no choice but to hedge by owning the AI. Yes, I agree. I mean, I think we've been talking about this a lot on the channel, that the only way to hedge against AI taking everyone's job is owning the company so that you get all the margin expansion and be in the asset ownership class of the ecosystem around AI. The pushback from that, from the AI doomers, is that it doesn't matter if you own the AI stocks, because if everyone's laid off, there's no like productivity to even go around. Right? Like if you're an engineer in San Francisco making $300,000 a year at Meta, and then you get laid off, like Meta, you're not going to be spending that much because you got laid off, which means the advertisers might not be paying Meta that much to target you because you don't have the discretionary income to spend. And so that's the full-on doomeristic perspective. The other perspective is that Meta's going to have so much freaking money, because even if the advertising spend, because they're going to just have so many new ways to make capital and the lines of revenue given the efficiencies in the business, especially if they don't have to pay you $300,000 a year, which is a decent sum of money. If they can save that money and pay $200 a month to some agent to do what you're doing, like that's a massive level of savings. So long-term, you know, maybe that labor market doomeristic scenario is possible, but in the short term, Meta stock, Amazon stock, you know, if Amazon replaces millions of people with robots, it's going higher because operating margins are definitely going higher. Tom Lee just tweeted, so there's a chart. Tether bought more gold last quarter than every central bank. We talked about this story a while ago. Wow, Tether bought 26 tons of gold. Tether is a stablecoin company. Tom Lee says this reinforces what we said earlier this year. Crypto stablecoins are the biggest buyer of gold in the world and have been the singular driver of higher prices since early 2026. This is not bearish for Bitcoin, but is setting a higher future price for Bitcoin. It definitely explains why Bitcoin has not been mooning, though. I mean, if all that money, I mean, you're talking about a crypto stablecoin company that's valued at $500 billion for their last funding round, which is Tether, that's buying gold. Now, the reason they're buying gold, by the way, they're not buying gold because they like want to turn it into a necklace. They're tokenizing it. So Tether is launching tokenized gold. I mean, there's a couple of exchanges that have already launched tokenized types of gold. And so you need to have the reserve asset if you're going to tokenize it, just like if you're going to tokenize dollars, you need to have treasuries. But that also means that, you know, maybe a lot of that money that could have gone into some of these other crypto assets is not necessarily going there. Nvidia back to 180, S&P back to 678. So I agree with Tom. It's not long-term bearish for Bitcoin. It's just short-term. You know, some of that liquidity is not coming into Bitcoin here. Where is gold? Gold is 4140. Gold had a little bit of weakness down to 3,800 a couple weeks ago, and then it just bounced right. I mean, I'm not a commodities guy, but my goodness, I've been surprised by the rally in these commodities. Like, who would have thought gold would be up 60% on the year? Who would have thought? Gold is outperforming the S&P 500 by 5x. Like if you asked me that back in January, I'd be like, no way. Even if we have geopolitical uncertainty, gold is not going to outperform tech stocks. And it did massively. So that was a big year for a lot of people that went heavy in gold. And now the question is, can that continue in 2026? You did have some analysis this morning on gold. Deutsche Bank said they think gold will be 4,500 by the end of 2026. And their main argument is ETF inflows are strong and central banks continue to buy. I think JP Morgan has 5,000 on the target as gold. Your uncle would have, well, he's still, dude, he has a lot of calls on silver, like just straight up calls, not even just stock. And I think he's still holding on to it, but silver is his main pick of choice. Silver's had a great year as well. Yeah, gold market cap increased 10 trillion this year. I think it was 20 trillion in January, and now it's like 27 trillion, 28 trillion roundabout. I don't think it hit 30 trillion yet. It's at 28.9, which is pretty damn incredible. Okay, let's see. What other headlines do we have? Talked about some of the reach. Oh, this was that piece of content that's going viral. So I'm not going to go through all this because there's a lot to go through. I will say though, this picked up yesterday. This is kind of an old post. It's from February, but it kind of picked up some momentum yesterday, and I saw it for the first time. Maybe some of you guys have seen it. It's kind of convincing. I put it in the chat. There's this dude who put a lot of evidence together, and he's like, hey, Jack Dorsey is Satoshi. And I'm not going to lie, when you go through some of the evidence, like he put out this entire PowerPoint. Now, maybe this guy just has too much time on his hands. But like, it really did make sense. I'm like, dude, maybe Jack Dorsey is Satoshi. So if anyone wants to read through that, you might have your argument on who is the creator of Bitcoin. Which, if it is, it's crazy because that means Jack Dorsey, his net worth is way bigger than what people think because he has a ton of Bitcoin that he probably might not sell. Jack is not smart enough to be Satoshi. Okay, Jack is very smart. I didn't love him as the CEO of Twitter. I don't love him as a CEO in general because I think he's very he's not like Vlad, which is hyper focused. He's like very, thinks about a lot of things, has a lot of projects and stuff. But he's a smart guy, dude. He's an incredibly smart guy. He was just asked recently, and his answer was not no. That's such a Jack answer. All right, what else do we got? Dell's still up 3%. A little bit of that drawdown grab right there is up about 2%. Starting to reverse some of those red candles. Nvidia's still at 179. Google's still down. I think Google down is a nothing burger. It pumped to 330 after being at 270 last week. It's going to take a breather. So it's probably healthy that Google chills out at 320, 318. Tesla right there, 417, and then Apple at 277. App Lovin', that's up 3. Robinhood as well, getting taken down from 125 to 123. Let's see. John, thanks for the super chat. Amit, do you think OpenAI wouldn't be able to commit all the promises of spending? If so, should I be worried as an AMD shareholder? The answer to this question is I really don't know. I mean, AMD has committed 1.4 trillion. Like, my gut tells me there's no way in hell they're going to be able to spend that much money. But I think they're going to spend a decent chunk of it as the revenues scale. Now, if Gemini gets in the way and businesses just don't use ChatGPT as much, then yeah, that could create an existential threat for ChatGPT. But I think they will turn into a very large company. If they were to pick between their vendor financing, I don't think they would not pick AMD. I think the deal they have with AMD should be prior, especially because OpenAI gets equity in AMD. So maybe they don't pay Oracle the $300 billion they said they were going to pay, which now seems like a fantasy, to be honest. But AMD, the 60 to 70 billion they were going to pay, they know there's a lot of upside for them in the future to get 10% of the entire company. So I think as an AMD shareholder, like, OpenAI will stay committed, but if there's general issues with OpenAI's ability to grow as a company because of whatever obstacles that come in the way, Obviously, that could be bear case for not only AMD, but Nvidia, Broadcom, a lot of those names. But I think if they had to pick between the vendors, AMD would be on that list. Okay, what else do we have right here? If Google LLM is already good, ChatGPT is unnecessary. You know, I've been playing around with a lot more than one LLM recently because I've been asking more questions and I've wanted to see kind of the divergence in responses. I will say there are use cases where ChatGPT is just better than a lot of the other ones. And I don't know if that's going to exist forever, but you do have a decent chunk of topics where GPT is just better. And right now, I think the LLMs have, like Claude is really good for coding. Gemini is getting really good for multi-purpose and image generation. ChatGPT is good for like conversational stuff. So I think a lot of them are just not fully super LLMs yet, but eventually that's coming. Here's another chart that came out yesterday. This is from Goldman Sachs Global Investment Research. Cash levels in U.S. equity funds have declined to 1.2% of total assets, the lowest in the last 20 years. This is below the February low of 1.3%, aka more money has gone into the market. And today's level is also half of what funds held in 2023. As a result, the cash and liquid assets in U.S. equity mutual funds is now $155 billion, which is a lot of money, but that's the lowest since the 2020 pandemic. So when you look at something like this, then you look at the option volumes we saw last week of 3.5 trillion. Then you look at what JP Morgan said, which is that, or sorry, Goldman Sachs on their trading desk said that hedge funds have been buying the highest in over 6 months over the past 2 days. It seems like money's coming into the markets. It seems like money is coming into the markets and people are buying these dips. And maybe that's why you've seen a little bit of the stability of the S&P, which is not that far off from those all-time highs. 677 on the day for the S&P. Duolingo, what do we see? Duolingo 186.29. Wow, that's up 6%. Okay. So Duolingo having a little bit of a move. Stock draft update. Matt is catching up. He's back at 20%. I'm at 25.7. Steve's at 1. Tanner's at 15. And Chris is at 6.3. Still down 60% on Duolingo. But that's what we got. Why is CrowdStrike down? I think it's because Zscaler is down. You have a bunch of the cybersecurity names that are taking a bit of a hit. By the way, take a look at this graphic right here. I know we talked a lot yesterday about Meta. Cheapest Mac 7 on a forward PE basis at 21. S&P's at 22, Nvidia's at 24, Microsoft's at 25, Google at 29, Amazon at 29, Apple at 30, and then Tesla at 189. But Meta's trading lower than the S&P 500 on a forward PE basis, which is quite incredible. This stock draft is going to end in June of 2026. You know, should we do another stock draft for 2026 in general? Should we do like a January to end of December 2026 stock draft? Then we would have 2 drafts, but I feel like that would be fun. Honestly, I would probably take my entire portfolio and just get rid of that damn green owl. Like, I'm pretty happy with the picks I have. It's just freaking Duolingo. Chris said it yesterday. Maybe we should do that. That would be fun. That would be kind of fun. We can maybe have some different rules for it as well. That'd be pretty cool. S&P right there, 678. I'm big Duolingo again. Well, buying Duolingo at 180 versus 480 definitely would be helpful. But I don't know, dude. Is Duolingo bottomed, or is sentiment the worst it's ever going to be for Duolingo? Like, that's the question. And honestly, I don't know. Because 2026, you know, they've got to really reaccelerate growth. And they're already growing nicely. It's just the narrative of them being commoditized is the tough part. Yeah, we're going to be starting to talk about portfolio management and construction for 2026. I've been drafting a lot of thoughts myself, have a bunch of different ideas coming up, a bunch of different kind of articles I've been writing out. It'll turn into videos. And so I'm kind of organizing my thoughts as well. Obviously, the drawdown over the past couple of weeks has kind of shifted the landscape of like how to, because now you just have lower stock prices, right? So you're thinking of what should be the strategy for 2026. One thing I was talking about Steve last night though, Meta, Amazon, and Microsoft are at their lowest multiples on an EV to EBITDA basis and Meta on a PE basis in about 3 years. I mean, is that the play for 2026? Just go long Meta, Microsoft, Amazon? That's a really simple portfolio in 2026. Really simple to maybe trim some of the winners, rotate into some of the losers, and go long on 3 of the 7 greatest companies on the planet. Nvidia, by the way, although it's had a better year than a lot of those names, is still up 35%. Nvidia is still, again, trading at a 24 times net. Like, it's not that expensive. So if the theme for 2026 is the rich get richer, the big get bigger, which is, I remember Steve and I did a stream back at the end of 2024. That was kind of both what we believed in. You had all these analysts on CNBC talk about small caps. And I remember both of us were just like, no, the small caps cannot be the answer next year. And small caps have done well, but IWM up again on the day. I think it's not been the type of return. I mean, small caps are up 11%. If you picked a decent Mag 7, you're beating 11%. If you pick the S&P, you're beating 11%. So it's like maybe the big get bigger is the theme for 2026 again. I don't think it's crazy to imagine that couldn't be the theme. Would you be building a dividend portfolio for income? Yes. A portion of, I've been looking at some dividend stocks. A portion of the portfolio in 2026 is definitely going into some dividend plays. By the way, Beyond Meat right there, 16%. I don't know what the headline is, but Beyond Meat is pumping. To be honest, what's the dividend play I've been looking at? It's not a high dividend, but I mean, is it that crazy to take a bet on it? Good old PayPal. Like, if I buy PayPal, it would not be off the assumption that I'm expecting this stock to go to the moon. It would purely be, I think it's bottomed. And it shouldn't go back into the low 50s. And PayPal has some decent call premiums. You can sell some aggressive calls every month. And if it gets sold, who cares, right? And you still collect a little bit of that dividend. So, yeah, BM&R and Nvidia now give a dividend as well. That is also fair. But PayPal's up there. Verizon obviously is another really good one. Chris has talked a lot about this one, 6% dividend. This one's also basically oscillating around 38 and 42. Do we really think PayPal's going below like 55? Like 57, I think was the low last week. Like, do we really think they're going to take it? Like, if they do, this story is going to be studied for a long time. Look at that chart. Went public in 2015 at 30, got to 300 in 6 years, 10x'd. And now it's a double from IPO at 61. I mean, I don't know. I don't know if they're really going to take it that much lower. Yeah, BM&R is paying a 1 cent dividend, or they will start paying a 1 cent dividend. Does the winner get a prize in the stock draft? No. I mean, we kind of had this like $1,000 bet, but I don't think any of us. It's kind of just more bragging rights. It's not really an actual prize. Why is Beyond Meat pumping? What is the news? Why did these guys go up 16% just now? What is the market like about this? Yes, IBM also has a dividend. I don't see any news. You probably had just a whale come in and buy a ton of stock, and they might just dump it in a bit. But I don't see any headline here. Why are they paying a 1 cent dividend? I don't love the BM&R 1 cent dividend move either. I think they want to be classified as a dividend stock so that some of these dividend funds can be like, well, we want some crypto exposure. We also want to make sure that we are eligible to buy it. It needs to pay a dividend. So I don't know. I don't think it's the greatest idea, but nonetheless, if it incentivizes more funds to get in, maybe it's not a horrible idea either. Okay, let's see what else we've got going on. Let's get a little bit more coverage on some of the consumer stuff, and then we'll keep going from there.
I don't know. More on gambling?
Maybe
that's
although
a
some of those are
indicator?
as levered, some of those gambling names are as levered to Macau as
True.
anything else.
Yeah, which has
not
been doing
necessarily
well.
Vegas. Yeah.
But I think, and some of the sports gambling as well has been in a sort of upturn or uptrend here. I think the broader takeaway, though, for the consumer is while there are signs of stress, there are also some real signs of strength. And today's exhibit.
And that's the divergence. We got Mark Mahaney on as well. Let's get his thoughts on Google, as he's been pretty bullish on this name even through the drawdown.
On Google 6 months ago because of the DOJ and because of ChatGPT, and I just think the market was way too negative. The stock was oversold at 15 times earnings. Is it overbought here at 29 times? No, but I think that the pitch you make for it's very hard to see a material re-rating in the multiple going materially higher from here. But fundamentals look great for the company, and this big broad pitch they can make of we've got the leading AI model. We've got the broadest way to monetize that of any company in the world. Oh, yeah. And we've got the lowest cost infrastructure because we're vertically integrated up and down the tech stack. That's a very powerful pitch. And so I think this stock is now a high quality compounder. It can largely hold a multiple, though watch for some negative catalysts coming from ChatGPT in the next 12 months. But it can largely hold the multiple, and the stock can go higher from here. I think there are better candidates from here, more dislocated opportunities. But, all the credit goes to Google, and I think the stock can still compound. I think you can still hold it.
Yeah, I have made the point many times. The narrative has shifted so dramatically around this name, as you point out, in a relatively short amount of time, when it was all about, my God, their monopoly in search is going to go away. And then to your point, of course, the upcoming DOJ at the time, but then the remedy from Judge Mehta was virtually nothing. All right, that's not a question, but this is, which is, you just mentioned ChatGPT. I mean, this race is not over yet. And there is a view in some ways that it might be winner take all. How do you see it?
Oh, it's not winner take all. You're going to have a couple of large winners, and I want to make sure we don't lose. We haven't heard from ChatGPT in a while, but we will. We're going to get that billion DAU announcement or billion WOW announcement, weekly average user announcement. I think that probably comes in the next 2 to 3 months. And then I think it's almost inevitable that ChatGPT, OpenAI are going to launch an ad model next year that they may not call search, but it's going to look like, feel like, smell like search. And it's going to be a paid lead generation model that won't impact Google's revenue anytime soon. But, that will give them a run for the money in the next, call it 2, 3, 4 years. So we haven't heard. ChatGPT is still out there. Let's not forget that. And in the meantime, though, I think what's wonderful about Google right here and now are the fundamentals. I think you're going to have accelerating search revenue growth, accelerating YouTube growth. Google Cloud growth is going to stay solidly in the mid-30s. And then Waymo, we've had this dramatic acceleration in Waymo rollouts to different cities, and they by far own the robo-taxi market. Hats off, credit to them. So I just think the fundamental setup on Google is super strong now, and the valuation, largely reflects that. So it's still a buy for me. I'm sorry, it's not just a hold, it's a buy for me because I think it's a high quality compounder, kind of in a way I thought Meta was. But now I think that the risk reward between those two stocks probably shifts a little bit and makes me think a little bit more about Meta here. It's maybe more attractive than Google.
Just on valuation, because the knock, of course, on Meta is maybe, I guess, historically been about CapEx worries, but now it's lack of enterprise. I just wonder to what degree and how enthusiastic can you get about Meta here?
Well, you have to believe in a product cycle, and you have to believe that there's going to be a super product coming out of all these investments in super intelligence. My guess is that there will be. We're going to see a tool, an app, a platform that becomes out of Meta. And the market now, we just swing back and forth. The sentiment does on these names. The market's skeptical.
By the way, Meta released an image generation model a week ago, and no one cared. So it's like, I think for Meta in particular, he's right. There's going to need to be that consumer-facing use case, because at the end of the day, they're a consumer company that billions of people will use. And it's not an LLM. Like, that's Gemini, that's GPT, that's Claude, that's Grok. It's not really Llama. So what is it? I think that's what the street is. And if Zucks comes out with something that is very obvious to be a winner in the age of AI, and billions of people will use it one day, I think the street's going to be really happy. But right now, the street's just wondering, what is that product?
That Meta can be an AI winner. But, this company has actually got some pretty good proof points. Over the last 2 to 3 years, they have factually proven that they can deploy AI to improve their platform for both users. That's shown up in rising engagement, and for advertisers. That's shown up in the fastest ad revenue growth rate across the industry at scale of anybody. So they've proven that they can deploy AI, and the market seems skeptical that they can kind of repeat the trick. And my guess is that we're going to get some sort of product announcement. I don't know exactly what that is, but my guess is that we're going to get that in the next 6 to 12 months, and you're going to get a re-rating in Meta stock from kind of like 20-ish today back up to kind of 25. Both of these companies are companies that are going to give you, mid-teens, maybe high teens revenue growth, margin expansion, and a lot of share buybacks. That's a 20 to 25% earnings compounder, both of these names. And those stocks, that warrants a mid-20s PE, maybe a 30 PE. So if you get a dislocation opportunity in one of the names, like I think you're getting in Meta now, you can kind of wade in a little bit more. I have a slight preference for Meta over Google right here.
But is it enough that clearly they're monetizing a lot of what they're doing in terms of AI and advertising? But is that enough, given just how much they're spending? What, more than $100 billion this year building out a hyperscaler?
You're asking the right question, Sarah, because the advantage that Google has is they've got so many different ways to monetize AI directly through cloud. They're embedding Gemini 3 into all of their apps and features. They're making them better. Google's enterprise offerings, Workspace, not just cloud, but then also their core search business. And you don't have as many monetization shots on goal with Meta. You just don't. But, we're going to see. They do have this asset, Meta AI, and whether they could turn that through a better LLM, whether they can turn that into a much more effective asset, a digital AI assistant. That's what all these companies are chasing. If they can do that, I think they probably can do it. The odds, I think, are better than what the market fears.
All right, so let's ask the question right here in the chat. Which one do you think outperforms next year from these prices? Google or Meta? I'm pretty sure most people will say Meta, but it is an interesting question because, what if there's not a lot of AI monetization opportunities next year and the street still just feels that it doesn't deserve a massive premium? Tesla right there, 419, that going green, S&P 678. Duolingo, one of the best days it's had in a month, up 7%. Meta still red, and then Nvidia at 180. But then again, Google has had a crazy run. So valuation-wise, obviously Meta might be more in tune. Wow, it's closer than I thought. 55-45 for Meta. That would be like 80-20. He's right, though. Google has a lot of... I think that's the one thing that a lot of the bears missed on Google. It's like they have a ton of ways to monetize AI. Cloud, obviously, being one of the most important ones. But because they own the consumer, YouTube, AMD getting a pump right here as well, 3%. Search, obviously, AI mode, Gemini. Then you have their bets with Waymo. Now the TPUs could become a business for them. And so, you're seeing that type of opportunity right there, which is very exciting for Google. For Meta, I think it's a little bit more confusing outside of advertising. And again, I'd be curious to see what, and again, this is where Meta, Google had all these lines of businesses and they eventually figured out how to monetize. Meta, I mean, unless there's a line of business I'm not aware of, it's Reality Labs, glasses, and then ads. And WhatsApp and Instagram, Facebook are included in that. Glasses are a dud for now. Reality Labs is losing money, so it's just ads. So they would have to potentially create a new line of business, which is not impossible. I wouldn't bet against Zucks to do it. But what is that source of ROI that Zucks has paid billions of dollars for all these researchers to come up with? I mean, realistically, I would love to know in the chat, what else do you think Meta can do to make money? Because right now, 95% of the revenues are from advertising. And it's something as a Meta shareholder, even I am asking myself that question, where do they get another AI opportunity? Now, again, I will say this, they don't need another thing for the stock to be worth more than it is today. If they're a one-trick pony, that one-trick pony can take them to a $3.5 trillion company because the business is so good. But they're also spending a lot of CapEx, and the market's just hey, do you need to spend all of this and keep wasting this CapEx if you don't need to spend on that many GPUs because you just don't need that many GPUs for advertising? What else are you guys trying to do? They already have dating that just fuels their advertising network. Again, monetizing WhatsApp will again be an ads business. Maybe there's some level of, commissions and fees they will take from WhatsApp merchants, but a lot of that is rooted in an ad. They don't have a cloud yet. I think there's a world in which they come up with, even Zuck's teased on the last call that if they have excess capacity for data centers, they might end up building their own cloud, which I think would be very bullish. Zuck said that companies are coming to them asking for more products and services in the age of AI outside of just their foundation models for advertising to kind of be a full stack suite of services. Which, what does that sound like? That sounds like AWS. That sounds like GCP. That sounds like Azure. Maybe Meta's not going to be at that scale, but if they could offer it to some extent, I think the market would really appreciate that. And then you have the metaverse, which I don't know if the metaverse is going to be that exciting for them. But right now, advertising kind of is the main argument. Threads is taken. That is correct. They already are starting to advertise on Threads. I think Threads has 240 million DAUs, which is crazy because it's like they launched it less than 2 years ago and it's already at 250 million DAUs. Meta Cloud running Google TPUs, that would be hilarious. If they're using Google TPUs to run their own cloud services, that would be kind of funny. I feel like in that case, they would have to buy even more NVIDIA GPUs, which is the bull case for NVIDIA. But the point is, I wouldn't bet against Zucks. I just think that is the question that the street now is concerned about. S&P 678, as that stays green on the day. I don't use Threads, but there's a lot of copycat accounts. Like if you type in my name, you'll find a ton of these bot accounts that are like just copying and pasting my tweets. You can't even do anything about it. You can't like there's just too many. You can't get them to like stop or anything. I'm just like, whatever, dude. So there's a bunch of people that reached out to me. They're like, you're on Threads? I'm like, no, but there's some people that are pretending to be me on Threads. I've tried using Threads. It's just not my cup of tea. Like a lot of it's more pop culture and this. I'm like I care about the news. I care about the markets, and so it's definitely tailoring itself. People that care about Kim Kardashian's latest relationship. Meta needs GPU for video graphics and not TPU. Yes, that is also fair, especially for what they're doing with image generation. S&P 678 is holding on. Zeta, by the way, great earnings from Zeta last week. Great earnings guidance. The stock's not been able to hold its pump, but 18.25, that's up 1.5% on the day. We got Dan Ives on. Let's pull over to him. He says Nvidia is the Rocky Balboa of AI. I'm not going to make you guys mad and say what I was going to say. But let's just say that I'm not exactly sure what the hell Rocky Balboa is. All right, Dan Ives, what's going on?
Being bullish on Nvidia, writing, Nvidia is the indisputable Rocky Balboa champion of the AI revolution, and that is not changing anytime soon on the chip front. Pleased to say that Dan joins us now. Dan, great to see you.
Great to be here.
Okay, I want to ask about the post, because you had that post of them saying like, congrats, Google, but we're better. They also responded to Michael Burry's takedown of the depreciation thing. It kind of gives a feeling that like Nvidia cares about the fact that their share price is falling and they're trying to fight back against it. What do you make of this sort of PR push they're doing?
Yes, I view it a little differently. Look, I mean, at the end of the day, like there's one godfather band, and that's Jensen. I think Jensen right now, it's a recognition that they're transparent. In other words, like NVIDIA is not trying to hide anything. They're ultimately saying like, hey, we are out there front and center. And it just comes down to demand and supply is 12-1 for their chips. I mean, I saw that being in Asia for the last 3 weeks. So them congratulating Google, AMD, and others that are going to be successful, it continues to be NVIDIA's world, and everyone else is paying rent. But the reality is that they are not going to sit there and hide behind some PR when it comes to, whether it's Burry or anyone else calling it a bubble. I mean, Jensen's going to be out there front and center because, in my opinion, it continues to only be 10:30 p.m. in that AI party that goes to 4 a.m.
But, okay, so Rocky Balboa is the sequel to Rocky 5? Really? It took them 15 years to make the sequel? I genuinely did not. I'm sorry. I had no freaking idea. But this is a very large franchise, I guess, for them to come up with these many movies, but I did not know that. It's the main character. Rocky's the main character. Yeah, but that's the name of the movie, right? Rocky Balboa is the name of the movie. 2006. And it says this is the sequel, follow-up to Rocky V that came out in 1990. No, dude, that's his name. Okay. Well, I don't know what to say.
This makes me think a lot of Intel back in the day when we were all rushing out to get the 386 and then the 486 and maybe the Pentium, right? But then Apple was like, why are we giving them these margins? Let's make our own chips. And so did everyone else. And now Intel obviously needs a sort of government bailout in the form of a stake purchase. Why isn't Nvidia vulnerable to the same kind of vertical integration at these, if Meta, if Google, if Amazon all make their own chips, as they are doing?
It's a great point. And I get the comparison. They're 4 years ahead, in my opinion, of really anyone else in the world, including Huawei, right? So it comes down to like, now, will there be a gap narrow? Big tech's going to continue. They're going to go and make their chips. You'll see that they'll vertically have that ecosystem. And that's a great thing. Because the reality right now is like 12-1, demand and supply. In other words, NVIDIA doesn't have enough chips to ultimately meet demand, right, relative to what we see. But it speaks to my point. It's about the second, third, fourth derivatives of AI playing out. You have $3 to $4 trillion that's going to be spent in the next few years. To call this a bubble, it's wrong. Someone like myself that covered tech stocks in the late 90s, it's a 1996 moment, not a 1999 tech bubble moment. That continues to be our view.
How does that $3 to $4 trillion of spending get funded? Famously, Sam Altman was asked on stage a couple of weeks ago how he's going to fund his $1.4 trillion in CapEx plans with only $13 billion in revenue. And he just got so angry that he declined to answer the question, right? I see that, ChatGPT has right now, I think, they have a $20 charge, right, for the account that I pay double because I have a work and a personal account. But they're not making massive amounts of revenue. 35 million people are signed on, and it could turn out to be like the Friendster or even maybe the MySpace of AI. Where does this revenue come from?
Yeah, well, see, look, today it's still enterprise. When we think about the enterprise, only 3% of companies have gone down the AI path. So when you look and that's just in the US. Globally, that's just actually starting with sovereigns, what we're seeing in Asia. So when I look at OpenAI, I view it as, it's not just going to be a ChatGPT. It's about what that's going to be on the enterprise, consumer. The consumer applications haven't even started relative to
But it has
Apple
to come
and
quick, right? I mean, remember when the .com bubble burst, it took years and years to make up the revenue that we needed to pay for the fiber outlay in the beginning.
Yeah, and I think for OpenAI, for every dollar that they're spending in terms of the stakes that they're taking, they're just like Nvidia, they'll get $12, $15, $20 back in terms of revenue.
If we're though talking about who wins the enterprise race, I mean, wouldn't that be Google though? They already have relationships with 40,000 companies. And then when it comes to consumers, they know that name so much better. I mean, increasingly, obviously, they know about OpenAI and Sam Altman and ChatGPT, but especially with that enterprise relationship, who's to say that OpenAI wins out on that horse race?
Look, I think there's going to be many winners, right? I mean, from NVIDIA on the chip side, when you talk about Microsoft, where they stand on the hyperscale, Oracle, and I think that stock's been way oversold here. But look, the reality is you go back earlier this year, the New York City cab driver was bearish on Google. Now look at it, because it's my view, it's not just on enterprise with GCP, with Google Cloud, with what's happening on chips, along with Broadcom, but also, you look out, they're going to ultimately have that Apple deal. I mean, Apple is going to have to bet on Gemini as their AI partnership, which is another benefit here. So I think it just speaks to our view is that, it's not just about NVIDIA. And I believe NVIDIA ultimately is a stock that goes much higher here, 225, 250. But it's about the second, third, fourth derivatives playing out across, I think the world. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech.
So Nvidia at the lowest in the month, is this just like the most incredible buying opportunity that we're going to see for this company?
Every time this sells off, you own it, because it's my view, it's 5 trillion and ultimately it's 6 trillion. Because look, there's only one godfather, right? And that's Jensen. And there's one ship in the world fueling the AI revolution. And that continues to be Nvidia. There will be other, like anytime if there's a DeepSeek moment, you'll have Google TP. You know, there's going to be other things that happen, but nothing is going to get what I view as really this Rocky Balboa of the AI revolution, which is, you know, Jensen and Nvidia.
You must have the most fun.
Dan Ives, relatively consistent in the midst of a bubble narrative or no bubble narrative on his take on AI. And he continues to call Nvidia the Rocky Balboa of AI. Dude, you guys are getting mad at me because I said it's the name of the 6th movie, but it is. When I Googled it, it says Rocky Balboa is a 2006 American sports drama film. That's why I said it's a movie. Now, I get it, given the 5,000 comments, that it's the guy's name in the movie, the protagonist, but it's still the name of the movie. That's what I got when I looked it up on Google. So for everyone mad at me about that, I don't know what to tell you. Don't know what to tell you. I found out 2 things. This is why I'm thankful for you guys as an audience every single day. I found out who Daniel Day-Lewis is. By the way, I told Steve on the phone the other day. He was like, no, you didn't. I was like, dude, I told him I didn't know. He was like, why would you say that? I was like, I was being authentic. I'm not going to lie about it. It was like, goodness gracious. So I learned who Daniel Day-Lewis is. And I learned who this Rocky Balboa guy is. So this is a productive week for me in terms of learning about this stuff. This is embarrassing. Okay, it is perceived as embarrassing, but like I genuinely don't know these people. People think I'm trolling with this stuff. Dude, if it's more embarrassing than it is more funny, and I think a lot of you would say it's not funny, it's embarrassing, then why would I be trolling for the hell of trolling? Because then it's just not even funny. Like I'm I haven't seen Rocky, I haven't seen Gangs of New York, so I don't know these guys. I have seen Inception, I have seen Interstellar, I have seen Wolf of Wall Street, I have seen The Dark Knight, and I have seen High School Musical. And I think that ecosystem of movies that I've consumed over the past 28 years, that really sharpens my ability to discuss these topics. But you know, the other characters outside of that sphere, sometimes you don't know about it. It is what it is. It is. Bro just found out he's not funny. Oh my gosh. Erwin says, my truth is that I'm closer to a myth than the chat on the movie knowledge. Dude, I think there's a ton of you that are closer to me in movie knowledge than the chat. And so I know the chat gangs up on me, but there's plenty of people that probably relate with how I think about movies. Rocky Balboa is Rocky's full name. Okay, now I understand that. I got it. Understood. Pounds right there, 165. Abercrombie still up 4% of the day. Robinhood, 124. Guys, market's holding on. We're not really seeing a massive move to the downside. I mean, it's 10:49, so we're past 10:30. So you're also not getting sort of a crazy whipsaw down. We did have a little bit of that yesterday. PMI was not the best. Market seems to not care. Nvidia still holding 180. Nvidia still holding 180 right here. Okay. Don't insult me, dude. What movie was R2-D2 in? I know what freaking movie. Okay, that was like, I know that was Star Wars. All right, I'm not that culturally incompetent that I don't know where R2-D2 came from. See, I could have trolled right there. I could have said something stupid to troll, but I genuinely know where R2-D2 comes from. He comes from Star Wars. Now, have I watched Star Wars? No. Dude, it's Star Wars. It's oh my goodness, this shit is, hold on. No, it's Star Wars. It's not Star Trek. It's freaking Star Wars. Don't troll me. It's Star Wars. I just Googled it. It's not Star Trek. What are you talking about? Then Google has Star Wars character. No, seriously. Like, I'm not even playing right here. How are you guys spamming Star Trek? Look at the screen. It says Star Wars character on Google. I don't even know if you guys are trolling right now, if you're serious. Because if you're actually trolling, like I would be scared because I'm pretty sure it's Star Wars. Yeah, it's a fictional robot character in the Star Wars franchise. Okay, you guys are trolling. It's not freaking Star Trek. Thank goodness. I can't take 2 L's back to back, dude. I can't take 2 L's back to back. No way. Dude, I really got to get my heart dropped for a second. I was like, dude, because then you guys would really think I'm trolling for the hell of it. I'm like, I'm not. Like, I'm pretty sure it's Star Wars. Thank goodness I was right about that. Amit had to check. Yeah, of course I had to check, bro. There's like 50 comments saying it's Star Trek. And I've never seen Star Trek, so I have no idea anything about that either. Tanner says we just locked in as a unit. That was good. Oh, Tanner yeah, Tanner contributed. Tanner said Star Trek as well. Peak rage bait. Peak freaking rage. Dude, Steve got rage baited the other day. Someone in his stream, Steve cursed, right? He said the F word. And someone in his stream was like, don't curse. And Steve went off. Like, he didn't really go off, but he was just like, it's my stream. I'll do whatever I want. And we were talking about it the other day. He's like, can you believe someone had the audacity in my stream in the chat to say that I can't curse? I'm like, Steve, as you get bigger and more people start to watch, you're going to have people that say shit just to say shit. And I was like, you can't respond to that because then you kind of look like a dick if you're like, it's my stream, I can do whatever I want, even though you're right to say that technically. But it comes off as kind of cringe of like singling out that one person and being like, I'm allowed to say what I want. But it's also like, it's peak rage bait because it's like, it's like someone telling you can't curse on your stream is obviously going to get a reaction out of someone, especially like Steve, because Steve doesn't take any bullshit. But the Star Trek thing is peak rage bait here. I had to Google it though. That's why we're bullish Google, dude. We've been using Google AI every day for like a year just to get immediate updates on what's going on in the market. All right, what other headlines do we have? I don't see any other crazy headlines, dude. It's relatively light. We had the PMI news. We had jobless claims. We looked at some of the options market yesterday. Brad Gerstner tweeted. He said, we own Google, Broadcom, Nvidia, OpenAI, Anthropic. Not smart enough to pick just one winner, but I don't think that Benioff's tweet is much signal. He also says ChatGPT, wow, this is some information because he's a major investor in them, is almost at 900 million weekly users. Last number we heard was 800 million. So you got Gerstner leaking some information right there. Eventually, they'll probably get to 1 billion weekly users, but you do have Gerstner that is a bit excited around the broader AI sphere. Amit, are you going to buy any consumer stocks? I mean, that's a question that I would ask the chat as well. Are you guys thinking of getting into any of these consumer names? The problem with the consumer names is that I still feel if there's any level of weakness next year, like you just don't want to be in Chipotle. Granted, the stock's been cut in half this year. So is it a good risk reward? Maybe from a mitigated risk perspective, is the reward going to be there next year? I don't know. $15 burritos might not be the most exciting next year. So I'm already in one major consumer company, which is Hood. And I guess you could say Meta is the second consumer company I'm in. I mean, Amazon's a consumer company, but that cloud business is really the majority of what the street cares about. But like actually getting into like Urban Outfitters or something, I don't know if that's the play for next year. I don't know if that. Oh, if I were to pick, so I haven't done enough of a deep dive on Dutch Bros, but it is becoming more and more compelling, especially at these valuations. It's down from 70. Is it down for the year? I think Bros is still down for the year. Bros. No, it's up 5%. Okay, so it hasn't moved too much. It's up 11 over the past year. It's up 35% over the past 5 years. I just have never tried their product. So I need to like go to the West Coast and actually try it. So Shake Shack has some issues. I mean, I read a report on them a couple months ago that turned out to be relatively accurate around some of the broader end problems they're having with the upper class consumer, which tends to be a bit more of a Shake Shack spender. Honestly, I've never invested in restaurants. I really haven't. The one if you had a gun to my head, you say you have to hold a restaurant stock for the next 10 years. Honestly, dude, it would be Texas Roadhouse. And I don't know enough about the valuation. I don't know enough about the numbers. I really haven't done a deep dive on them ever. But every time I go to Texas Roadhouse, packed, absolutely packed. It's not like it's not like doing the volume that a McDonald's is doing, but my goodness, people love this place in the US. And they haven't really expanded that strongly across the country. Yeah, I'd pick them over Cheesecake. Now, granted, I'm just speaking off the top of my head. I don't know much about the valuations here, but I really do like Texas Roadhouse as a restaurant. I think Cheesecake is great, and I think that one will do well. But I think in terms of growth opportunities, like Cheesecake is way bigger than Texas Roadhouse in terms of the number of restaurants and locations, to my understanding. So I just think there's a bigger upside to Texas Roadhouse long term. Cava is still a bit expensive, dude. Cava, I know it's down from last year. Last year it got to like 150, right? Yeah, December 4th last year was 147. I know it's down a lot, but like the average price per location at their stores is still a bit aggressive. At 150, it was like 10 million a location or something. It was kind of ridiculous. Cava right there up 5% on the day. I still have never tried Cava. Sweet Green is another one I was looking at earlier in the year, actually. This stock just decimated. I'm happy I did not end up getting into this, but they had a management change, and that management change I looked into because that management change, given the guy they were bringing in and his talk on operating margins, and then I started getting some salads from the place. I was like, all right, let me look at it. But at the end of the day, restaurant businesses are tough. They're really tough. And you've got to have a really strong moat, which at the end of the day is your brand, to be able to expand. So I think Texas Roadhouse would be my pick. Chili's is up 50%. Dude, I haven't looked at Chili's in a long. The parent company is Eat, right? Yeah. Is that up 50% for the year? Eat stock? It's up 11% for the year. It's up 50% from the lows. Yeah, I've been to Chili's a couple times in my life. Never really loved Chili's, but that is another name that has done relatively well. Nvidia right there, 180. Meta's about to go green. S&P looks like she wants to get back to 680, and then Tesla goes green as well. Oh, Wingstop. Dude, Chris was talking about Wingstop in 2023 a lot. It's done well since then, but I never got into it. It peaked at 350 and then it sold off. Yeah, I've just not looked deeply into this one. I don't eat from a lot of these places. Texas Roadhouse is the one that I really do enjoy, but the other ones I don't tend to eat at that often. Tesla goes red again, back and forth by about 1%. What's your upside target for SoFi? I think I said this like 2 months ago. I feel like ever since we got into the rate cutting cycle, I think 35 end of year by SoFi is not crazy. 40 is, I don't know, maybe a little up there. Noto's got to get this thing above 45 for like 60 days or something by like June, which is definitely, or I think it's 90 days. So, I mean, the thing really does have to move if he's going to get paid heavily. But this thing ending above 30, if we get another rate cut by end of year, is not crazy to imagine. You know, the other stock that I haven't deeply looked at, but DoorDash. I mean, the amount of DoorDash that I've seen around the city is just incredible. I know they had a crappy earnings. I know that they're having some issues with consumer demand, but that business model is quite incredible. You just have a lot of people that just order food and they don't want to go out. That's why Uber Eats has become such a great business for Uber as well. It's just so contingent on the consumer at the end of the day. That's the problem. Yes, next S&P inclusion is December, I think 5th. SoFi could get announced. December 5th, they're going to announce it. I mean, look, SoFi has a shot. I don't think it's happening December 5th. If it does happen, that'd be amazing. But I think next year they have a much better chance of getting there. What do you think about Reddit? I am actually working on a deep dive on Reddit, so this will be one of the next deep dives. I like Reddit. I don't know if I love Reddit. Multiple is still up there. Now, the growth, they're living up to the growth. So I think they deserve the multiple. I think there's a broader AI story in Reddit that doesn't get talked about as much. But out of all the advertising stocks, they are growing the fastest. So I just don't know if 2026 you go like gig along on Reddit. Like I think the opportunities to go long on in 2026, given the market environment we're in and given the volatility and unexpectedness of what we get into next year, is not a name that is up a lot. You still have to look for an opportunity, and Reddit is up 5x from the IPO over the past year. Like Reddit has done very well, more than 5x. It IPO'd at 30, it's at 200. So that's where Meta and Amazon that have not moved becomes very exciting. These are amazing companies and they haven't moved. So maybe there's something to look into there. MicroStrategy, are we red on the day? MicroStrategy is indeed red. Trying to go green, but it is red right here at 171. Okay, let's see what else we have. It's 11 a.m. Do we have any headlines? No, we're not seeing anything. We're just seeing a lot of this retail trade. That's what people are talking about. These retailers coming back to life, kind of challenging the home builder narrative. But outside of that, nothing too crazy. If we can get that 680 close on the S&P, I think that's what's going to be very, very exciting for the market. 679.57. That's a 0.68%. As that one's trying to go green. I think that's it. I think that's most of our stuff. Jason said if either the S&P 500 or Qs can hold above pre-market highs, we will continue higher. But if they lose pre-market lows, we should expect to reverse much other progress. Okay, so basically that 677 level, Jason's watching pretty heavily. S&P, she's going for 680. She's trying here. She is indeed trying at these levels. 689 is that all-time high for the S&P. Gus says, what are some stocks that people own that are a bit oversold right now? I'm starting a portfolio. I hear Meta and Microsoft are good ones. What are some other ones that are cheaper? I mean, that's a great question for the chat. What are stocks that you think are oversold and that have Meta, Microsoft, Amazon level of quality to them in terms of the multiples they're trading at? Even with the drawdown, there are a lot of names that still, I don't know if you would easily say they're oversold. Because they were up so much. Now, like, I don't know, PayPal to me maybe but PayPal is not the highest of quality. But I would say that's probably oversold. AppLovin. Now, again, AppLovin has the SEC probe, but I would definitely 750 to 520 it got to last week. I would say AppLovin's probably oversold at 580. Their growth warrants a premium. It's just that SEC probe could be stopping them. Yeah, I would agree with Novo. I know Novo failed on the Alzheimer's drug this week. But I would also agree with that. Novo is a very high quality company. They just didn't get the right results this week. Is Roblox oversold? Roblox at 94. Year to date, Roblox still up 60%. It's down from 135. So it is down a ton, but still up a ton for the year as well. Celsius. Well, Celsius is starting to recover a little bit, right? Yeah, Celsius still up 52% year to date, down from 60 to 40, but you could argue that's oversold. Webull, you would have to really believe in the quality of the management to turn this thing around next year. Is it oversold? I mean, it did get to $80 at one point. Now it's at $9, so like maybe from that perspective. I don't know, dude. I think there's a clear winner in this space, but at $4 billion, getting this thing to $8 billion shouldn't be that crazy, especially if they have any narrative turning argument going into next year. Matt said, I can hop on for 5. Yes, Matt, let me send you a link. Matt, I'm sending it to you on X. And we'll get Mr. Matt Money onto the show. Are people traveling today, or are you guys like leaving the state or going anywhere else? Matt, I just sent it. Because I mean, my cousin is traveling here, but I'm not doing any crazy traveling. S&P 680, did we get it? Did we get it? Wow, we got it. See, this is what happens when Matt's about to come on. He pumps our bags. Look at that. S&P 680. Local travel, staying home and relaxing, going to the dispensary. I mean, that Thanksgiving meal might taste better after that. Yeah, SPY's down 1% from all-time high at close. Ori, thank you for the super chat. I mean, we are relatively close to getting to those levels. Doesn't seem like a lot of people are traveling or flying. Seems like most people are just staying at home. For Burry, do you think he would have gotten these many Substack subscribers if he didn't go short AI? No, like there's no way. The reason people are subscribing and paying, which I haven't paid the $380 or whatever to subscribe to him, because like I don't know, I don't want to pay that much money for him to, like, I'm willing to listen to his argument 100%. I'm willing to read it, understand it, but like paying $400 to access, like I'm like, no, dude, like that's a little aggressive. You think he gets 83,000 subscribers if he doesn't have something interesting to say? And what's interesting? Well, if we're living in a full-on bubble, that's pretty interesting. And if the world's most valuable company is literally calling you out in a memo to sell-side analysts, that's really interesting. So 100%, I think the subscription growth has been based on him going short AI. But he's also making like millions of dollars. I mean, I don't know what the conversion is on those 83,000 subscribers, but it's a lot of people that would pay $380 a year. And again, if it's a lot of investors, for investors, $380 is not a lot of money, especially if they think your thoughts can save them from losing all their gains if it is a bubble. So he definitely has a subject matter that people are curious about. All right, folks, let's bring on the man that got the S&P 500 right here to 680 all the way from his car. This is the first time we got Matty money from the car. Matt, is this
car
a
stream, man?
Is this a
no?
Lambo?
It's
That's what it looks like.
It's a Ford. It's a rental Ford F-150.
It looks like a Lambo to me, dude.
How are things? How are things, dude?
Good, man. How are you? I'm assuming you're traveling for Thanksgiving.
Yep, traveling. I had to work in the past couple days, so I was just hanging out in a hotel. I'm about to drive to good old Mama Farley's. That'll be a good time.
Do you like Texas better, or you like the East Coast better?
Oh man,
that's a good question. I think you're going to say Texas, but your heart wants to say the East Coast.
I think you're right on that. I think that's a good synopsis. I like living in Texas, but I don't have a lot of family. I have a good friend group now in Texas. But I think home will always be the Northeast.
Yeah.
I think. Yeah.
I agree. All right. So I guess, did you have anything particular, or I can hit you with some questions here?
Just wanted to say hi, man. Happy holidays. Happy to see that you're doing so well. And man, it's interesting. I'm liking your thoughts about a lot of the consumer-based names. I'm agreeing with you on a lot of them. A lot of them are traced a good bit, but it's a tough business. And so a lot of it as well, like you were talking about Kava and Sweetgreen, it's like they're coming down from like absorbently high cost bases already. So it's like unless the fundamentals show up, it doesn't make sense.
I agree with you. Let's start off with that. I mean, someone asked the question, would you go long any of the consumer stocks into 2026, seeing a little bit of this retail momentum and seeing the oversold capacity on some of these names? Or do you say, hey, Meta is too attractive to get into Chipotle?
Meta's attracting some of my capital right now. I don't have that Chris Patel money, but I have been buying a little bit of Meta here and there. It's just too cheap to ignore. But I've been adding to Dutch Bros a little bit. I think it's pretty cheap if you look at the valuation. I know you haven't, so it's okay. But I've been adding to Dutch Bros since it's retraced back into the 50s. I don't know. I don't have the perfect answer, but yeah, Meta's been getting a lot of my capital. It's kind of stupid cheap where it's at today.
So you don't have Chris Patel level of conviction, but is this something where you think it could be as big of like a Google or Amazon position for you one day? I guess at these levels.
I could see it building up to that. Yeah. Maybe it'll be tough with starting out where it's at. It took me 3 to 4 years to get my Google and Amazon positions to where they are. So it'd be tough for Meta to just like show up. But let me think. If I had 100 shares, I'd probably have to get to a couple hundred shares for it to match how much my my Amazon and Google is. So it'd be pretty tough. It'd require some capital or trimming of other things, which I've done in the past. You know, it depends on what's on the auxiliary. But on the auxiliary right now, I guess Dutch Bros is really the only one that's like auxiliary if you talk about core positions. But I don't know if I would want to trim Dutch Bros here.
Yeah, no, it's a fair point. And it definitely, I think, warrants more of a deep dive for myself, especially as it's down 20% of the year. Rock Lab at 41.80. Are you buying the dip? Are you holding? Do you think this is an appropriate valuation? How are you thinking of this stock right here?
Well, valuation, I think, always depends on what you're holding in your time horizon and your risk tolerance as well. But I'm buying. The only time I haven't been buying Rocket Lab in the near term was when it briefly jumped up into the 70s, and I was like, give me a second here. And I think I hit the pause button on my normal cadence buys on Robinhood, because you do that automatic buy on Robinhood. I think I hit the pause button for like 1 or 2 weeks, and then I was like, you know what? I got to buy the company. Like I'm a believer that it's going to go to over $100 billion market cap, if not more. So I was like, it might not be the best, but I was like, the way I look at it sometimes is I was buying shares at $3.50, $3.60. I'm buying some at 70. You average it out, it would have been buying pretty much at like $30, $35. So I was like, you know what? You know, instead of buying it at 350, I bought something at 35, which I would have bought anyway. So that's kind of the way I looked at it. So I was like, you know what? Let me continue to buy, and I've been buying ever since. I think I bought a decent tranche, nothing crazy. When it went down to, did I get the 38? I definitely got $42. But I don't know if I got the 38 on the dot or not. But regardless, I think it's a good opportunity for the people that have that long-term time horizon, can handle the volatility, because there's a lot of catalysts that are waiting, and as those catalysts get pushed back, then so could the volatility can increase as well, as we've seen.
Right. No, I agree. And when you have an average that you have, your margin of safety is so strong that averaging up is not the craziest idea. This is a chart right here from Bloomberg that everyone's looking at. Assets under management in U.S. leveraged ETFs hit a record $239 billion in Q3. It started to come down over the past couple of weeks, given people have been deleveraging, but those leveraged 2x Nvidia ETFs, for example, have gotten some momentum, which leads into kind of my last question for you, Matt. The state of this bull market. I know you've just been buying the dip, and you really haven't cared too much over the past couple of weeks. Do you think we're out of the woods? We're close to all-time highs? Do you think there's some hiccups left for the end of the year? How are you thinking of how this year ends out?
How the year ends out, I would say it's going to be flat to higher. I think some select names will kind of be cooled off a little bit. Like the Palantirs, I feel like have cooled off a bit. Not to say I'm not going to stop buying. I'm not going to stop buying. I'm going to keep buying Palantir and a lot of these other companies. So I think it just gives an opportunity while they've retraced a little bit to kind of pick some up and maybe give an opportunity of entry for people that were saying, hey, I'll buy if it gets to the 150s. I'll buy if it gets to this or that. But I think overall the market is strong. I think you're just seeing people see that there might be some hiccups that need to be answered, like in AI space. I think a lot of people are starting to get weary of how much capital is being spent, if it's actually going to show up. So I think some of that needs to be kind of answered, because you're seeing literally hundreds of billions of dollars across the Mag 7 go into this space, and I think it's all happening very quickly, and I think a lot of people have been very optimistic. So with that optimism, I think the stock prices have run a bit. But at the same time, these stocks aren't trading at like sky high prices. I mean, you talked about it earlier in the stream. You have some of these companies on a price to earnings basis trading at close to 20, and with the multiples that they have in terms of their growth, it's justified. Like buying Google here is probably a little bit more scary, but buying like Amazon, Microsoft, Meta, it's like almost a no-brainer, especially if they're able to keep up the pace of growth that they have. So to me, I believe we're going to end either flat or higher on a lot of these names going into the end of the year. And specifically, I think we're going to have a cut here in about a month or so, or less than a month or so. And so I think that's going to help. But I think the easy money's been made for this particular bull market in this cycle. And I think in the next 12 to 18 months, you should expect a rollover at some point.
You think crypto's topped?
No, I've been so Steve, I want to be very clear. I'm very particular on my words on this, and Steve told me that I was like, hey, your crypto winter is right. It's like, no, I don't think we're in crypto winter yet. I think we have another peak. I'm in agreement with Tom Lee and Michael Saylor, not necessarily on their evaluations that it's going to go like absurdly high. I'm still trying to understand and think through. I do think we're going to have some sort of peak between now and the next 6 months. Whether or not we get to all-time highs, I'm not 100% certain on that, but I'm cautiously optimistic we'll have a peak, and then we'll go into crypto winter sometime in 2Q, 3Q next year. But yeah, I'm cautiously optimistic. We'll see a reversal. I think this is a good opportunity for people to see what a taste is of crypto if it goes down. I think a lot of people were under this impression that crypto never goes down, crypto winter is never going to happen again. I think this gives people a good sneak peek as to, hey, are you actually, positioned appropriately? Is that something you can handle? And because I think when crypto winter actually occurs, it's going to be much worse than that. And so it's one of the reasons why I never got into BM&R. I don't hate BM&R. I think BM&R is a great idea. Same thing with MicroStrategy. It's just too late in the tooth for me in terms of the crypto cycle to be buying some of those names. And I'm really looking forward to the next 12 to 18 months starting to pick them up.
I think that's fair. I think that is very fair. And if we do have that upside momentum coming, then maybe this deleveraging glitch that Tom's been talking about could also be correct.
Could be. Yeah. Could be.
All right. Good stuff. Matt Money. Very thankful for you as a friend, first and foremost. There is his Twitter right there in the chat. Hope you have a great Thanksgiving. And dude, I know you've been teasing coming to New York for Christmas, but got to get you out here.
You're the man, dude. I don't know why it cut me off, but I'm going to hang up. Happy holidays. And I will see you guys next time.
All right. Enjoy. Talk later. All right. That was Mr. Matt Money. Hopefully he does come out in December. Oh, I was supposed to ask him if he knows who Rocky Balboa is. He could have defended me if he said no. You guys think he knows who he is? Because if he didn't, I wouldn't look as it wouldn't be as egregious of a thing that I said today. Of course he knows. So you guys are just all assuming that he knows. Let's call Steve right now. Let's ask if Steve knows. Let's see if Steve picks up. Let's see. Steve's gonna get mad. Yo, Steve, what are you doing?
Working.
Are you actually working?
Yeah.
Are you like you're legit like doing emails and shit?
Would you like me to tell you how many emails I've already sent today?
No, that's okay. That's okay. You can keep sending emails. Okay, so I'm live. I got to ask you a question.
Okay, I don't have the lotto numbers.
It's not about the lotto numbers, but you can't get mad at me when I ask you this question.
Oh God, don't you love when people start with that?
By the way, the S&P is at 680.5. We're up almost 1% on the day.
No, I have not looked at the market at all.
Dude, what kind of stock market? Like, what do you like? Do you even care about them? What do you mean you haven't looked at the market? It's 11:20.
Yeah, it's 11:20, and I've been trying to get a lot of stuff done because the office is closed the next 2 days.
Yeah, but you didn't even take a glance at
No, dude, when I get busy, I get to the point where it's 4 o'clock and I haven't even had lunch sometimes. Other days I can go to Patsy's and get chicken parm. Today's just not one of those days.
But you didn't even take a glance at the pre-markets? Like,
I will take a glance right now for you.
I'm just saying, dude, like, how do you not look at the market at least once?
Well,
But-
I trust me, I wish I could. Get busy.
Okay,
Yeah,
so
the market's doing good. Look at that.
here's the question. Do you know who Rocky Balboa is?
Don't even. Why would you do that?
Because Dan Ives today is like, NVIDIA's the Rocky Balboa of AI. I'm like, who the fuck is Rocky Balboa?
The
Like,
Rocky Balboa of AI. Dan Ives is amazing. I need to talk to Dan and be like, Amita has no idea about any of these references. We should just tell him he needs to go on vacation, get him a freaking cabin in the woods somewhere with no freaking service, and all he gets is a DVD player and a TV and DVDs.
no, but then I looked it up and I was like, oh, it's a movie. And the chat got even more mad. They're like, it's the name of the guy. But I'm like, it's a 2006 movie. That's what, like,
No, don't do that.
dude, I'm looking at Google right now. 2006, 1 hour and 42 minutes, Rocky
Do
Balboa.
that. Now I know you're trolling me because Rocky Balboa is actually the 6th movie in the stupid series.
Why did they call it Rocky 6? Why did they call it Rocky Balboa? Because what? How am I supposed to like know that it's a 6 sequel? To...
Do you even realize how many of these freaking things I've sent you? From reels, all the training montages. That's Rocky Balboa, Sylvester Stallone. From Rocky 4.
Again, I don't, just like you don't have the time to check markets. I don't have the time to easily click on all these reels that you send me, but no one can get mad at me for saying it's a movie when I look it up and it says Rocky Balboa 2006 sport action film.
But man, we've had this discussion before where I've said, hot take, Rocky 3 and Rocky 4 are better than Rocky 1.
How was I supposed to know the guy's last name is Balboa?
I guess if you've never seen the movies, you may have a point, as crazy as that is, because Rocky Balboa is just nostalgia.
Okay, so thank you for saying I have a point because I know what the Rocky movie is. But
yeah, no, and I can understand it from that aspect that you may actually not know who Rocky Balboa is because you've never actually seen the movies. But the fact that that is even like a thought is crazy talk. It's crazy talk. That's like saying LeBron's better than freaking Jordan. It just doesn't make sense.
I just wanted you to say I have a point. Now the chat can at least understand that Steve said I have a point.
But hold on.
Like, that's all
I didn't say it's a good point. I didn't say it's a good point.
I don't need it to be good or bad. I just need there to be a point. The pencil has to be a little sharp. There has to be a point.
You know,
that's it.
Like there's certainly a little bit of a tip on that pencil, but it's the smallest tip. I don't even know if it can bite because the fact that you actually don't know who Rocky Balboa is so sad. I don't understand. Like, I really don't understand. I just don't. How have you gone through life? Like, you were a teenager at some point. How did you not freaking blast the Rocky 4 music while you were lifting? Like, what's going on here?
I watched documentaries when I was little. I don't watch Rocky movies. Like, I didn't.
No, you're too busy watching fucking High School Musical.
Well, one could argue that if you were to compare both movies, and I can't make the comparison because I haven't watched, so I'm not going to make the comparison.
No. I wouldn't even go down that road. Do not say that publicly, what you want to say. Get it out of your head. Just get it out of your head because you'll lose half the chat.
I'm not going to make the comparison. I haven't watched the movie, so I cannot make the I'm just saying maybe one day after I watch it. I haven't watched it, so I'm not going to make the comparison. I'm not going to do it.
My brain is hurting. Like, my brain is actually hurting.
Okay, well, I just wanted you to say I have a point, so that's it. Thank you for the analysis.
I just don't understand how you've never seen any of the Rocky movies. Did you at least see Creed?
No, I know Michael B. Jordan's in it, though.
Oh, my God.
Right? He's in that shit.
Yes, he is. He's Adonis Creed.
Adonis Creed. Yeah. And Creed 2 came out a couple years ago.
And Creed 3.
There's a Creed 3? Okay. Well, no, I haven't watched this.
There's a Creed 3.
But I know Michael B. By the way, people don't love
Creed 2 is Rocky 4 2.0.
Okay. Well,
Because
wait, what is
versus West again.
I'm happy.
They got Dolph Lundgren in it. They got Sly in it.
No, so hold on. His name
Versus
is Apollo Creed in the movie.
Apollo Creed, man.
So I'm
Well,
really
his
happy.
father-
I'm really happy
His
for.
father was Apollo Creed.
Well, I'm really happy Creed 3 wasn't called Apollo Creed. It was called Creed 3. Just like Rocky Balboa should have been called Rocky 6. That would have like.
It couldn't be called Apollo Creed because Apollo Creed died in Rocky 4. So it couldn't have been called Apollo Creed.
Well, I'm happy they put a number next to the name of the movie. That would have saved us a lot of time today. Because I was like, guys, it's a movie. Everyone's like, no, it's not a movie. I'm like, pretty obviously says it's a movie on Google.
Technically, it's a movie, and it is a movie in the Rocky series, but it is actually the person. And after 5 of them, they came back and just made a movie called Rocky Balboa, him coming back to fight.
By the way, you definitely just spoiled the movie.
You're not going to freaking watch it, so it doesn't matter. What were the chances of you actually watching it?
You don't know, dude. Thanksgiving, I might actually pull these movies up.
Oh, yeah, sure. Okay. I'll believe that. But listen, man, there's no way you're watching that the same way you're not watching Friday Night Lights or anything like that. So.
All right. Well, I appreciate you just letting the audience know it's okay to not know the last name of the guy. That's
I
all.
didn't say it's not. It's okay. It's definitely not okay. I'm just saying that
It's understandable.
Yeah, it's understandable.
Okay, that's all we
I've never
need.
seen the movie, but I didn't say it's okay. It's not okay. Let's be very clear about that.
All right. Thank you, Steve. I'll see you later tonight.
Jesus Christ, what are we gonna do with you?
Dude, I still don't get how you haven't looked at the market all day. I'm like, what? It's 11 a.m.
Well, yeah, I was busy, but this is actually quite enticing now that I'm looking at it.
We'll talk about it tonight. We'll see if Triple V knows about Rocky. She probably does.
I'm gonna make you a pretty big bet. I will make you a sizable bet. There is no way him or Derek do not know.
Yeah, they
about
probably
Rocky.
do. No, they probably do.
In fact, if I was to text Derek right now, he would think I'm fucking with him that you don't know about this.
He probably would. He probably would.
He probably would.
All right. Well, now this week I learned about Daniel Day-Lewis and Rocky Balboa. So
But yeah, who cares about Daniel Day-Lewis? Like, the fact that you didn't know about Rocky is... Daniel Day-Lewis, I can understand that. Who gives a shit? Overrated. But Rocky? Like, really?
well, shout out to Dan Ives. I mean, he used the analogy. It got me down the rabbit hole. And now I
Can
know.
we set up just a 30-minute interview with Ives just about movies? Forget stocks.
Dude,
He's got
honestly,
good taste in movies.
honestly, he would be down for that. I think he would be down.
Let's do it. Let's do it.
Should try
Like,
to do
he's
that.
got good taste in movies.
All right. I'll hit him up.
Hit him up. Let's do 30 minutes on movies, and we'll see between me and Dan how many movies you actually haven't seen.
All right. By the way, the chat's not loving your DDL overrated take. But
Well, okay, tell the chat to name me 5 amazing movies he's been in.
it's a good question. I can name 5 amazing movies DiCaprio's been in.
So, I mean, anybody can. But in all seriousness, like, Daniel Day-Lewis, name me 5 amazing movies. Not that he did an amazing job in, but 5 amazing movies. Because you can have an okay movie, and an amazing actor makes an amazing movie.
Yeah, that's a fair point.
I'm going to go to his IMDb right now. Because now that I got freaking sidetracked.
All right, Steve, I got to end it anyway. We can't spend too much time on this. I got to get out of here. But I'm happy you explained to me who Balboa is.
Yeah, like, his best freaking movies are Gangs of New York and Last of the Mohicans. Like, don't tell me There Will Be Blood is a great movie.
Oh, yeah. Okay. I should have shut you off before you said, because that's the only movie they spammed 3 days ago when I said that's the, like,
There Will Be Blood.
There Will Be Blood. I don't know if you're getting away with that one. Look at that. The chat's already coming in. Like, what? What did he just say? See, honestly, you're a real friend, bro. You just took a lot of the heat off my back, and you know, this is why I love you. This is
like There Will Be Blood. It was a good movie, but it wasn't a great movie. Like, I will say he did a good job in Lincoln. I will say that. I mean, but once again, like The Boxer, not a great movie. Age of Innocence, not a great movie.
All right. Well,
he has not been in a lot of good movies. So.
All right. We'll talk about it tonight. I will see you tonight, Steve. Thank you for the education on this.
Yep. Later.
Later. Dude, you get Steve going about movies, he will freaking go off about movies. There you go. There's his take. It's okay for me to not know the guy's last name, and There Will Be Blood is not a great movie. S&P 680.65. Folks, we are really getting some momentum here. If we do the math, we are exactly 1.2% away from all-time highs on the S&P. 1.2% away. I mean, last week we were staring at 659. Today we're at 680. A lot of these names haven't fully recovered, but they're definitely not at their absolute lows. Tesla's still at 419, BM&R back to 30, Robinhood at 124, Duolingo's up 7%, PayPal's up a little bit, Nvidia holding 181. And the fact that Nvidia is still down from 197 and the S&P is 1% away from all-time highs, I mean, it really means that money has started to rotate, which is good. It's also very healthy. Amcor at 35. Look at that. Again, Amcor multiple is very, very cheap. So it makes sense why this one's getting bid up. Amazon 231. This was at 219 on Monday. CoreWeave was at 64. It's at 75. Cypher up 4%. CleanSpark up 5%. The retail stocks keep going with Abercrombie up 5%, Nubank up 4%, Palantir now almost 167. And if we end out like this in the next few hours, it might be a decent end to this week as we get into Thanksgiving. Google Red is like, yeah, not that big of a deal because, again, you just can't be that greedy on Google. Like, the fact that it's holding 300 is incredible. I mean, there are people buying Google at $319 today, and they are thinking that's a fair price to pay. So for all the people that paid much below that earlier in the year, you have tons of new bidders coming in that are ready to buy it higher. So I think Google holding these levels is definitely nice. Rocket Mortgage, how about this one? Jason likes this one. This one's up about 2% on the day as well. And AMD is up 4%. No earnings today after the close. There was John Deere had earnings this morning. That stock's down 5%. I'll see what their earnings were like. But outside of that, we have no other earnings on the day. Deere beat by 3% on EPS, beat by 8% on revenue. So you had a double beat for John Deere. Okay, that's what you got, folks. We will get into the market close and see what we've got going on. Right now, S&P 500 at 680.64, up about 0.83% on the day. If I do not see you on the market close, have a very, very, very happy Thanksgiving. And if I do see you, then we will do a sign-off towards the end of the day. Again, this will be my last day for streaming for the week. I will not be streaming Thursday, Friday, Saturday, or Sunday. So pretty much the end of the week for me here. And Friday, again, very low volume. So it's just not going to be, I think, anything super meaningful. But we'll be back on Monday. And next Monday is what? Are we in December? Wow, next Monday, December 1st. That's all right. So we start off the last month of the year next week. Don't come back until you watch Rocky. Oh my gosh. You know, me and my cousin tend to watch movies. Maybe she loves the freaking Marvel movies though, like the Iron Man, the Avengers shit. So I think every time she's here, we end up just watching one of those movies. Maybe I'll convince her to watch Rocky. And we'll try to watch that. But I think that's it for us today. Again, I'll be back on the close. We'll see how this ends up playing out. But that's pretty much what we've got. And if we can keep this green, that'd be 3 days in a row of a 1% green move. That's 3.5%. Again, we were down 4% for the month. That's pretty much reversing a lot of the pain that we had. I know, some stocks are still hit pretty bad, but the health of the bull market and for those stocks to inevitably get back to their all-time highs you need the broader markets to do well. And the fact that we're 1% away from the all-time high is not too bad. Not too bad at all. So it's going to be exciting. It'll be really exciting. Triple V is not a she. You might have misheard Steve. It is a he. But I'm pretty sure he knows a lot more about movies because he told me to watch Lord of War, which I actually did watch last weekend, and I thought that was a really good movie. But he probably knows more about Rocky. All right. I think that is it. Thank you, everybody, for being here. Mr. Stasiva, thank you for the $50 Canadian Super Chat. Deeply, deeply appreciate it. Thank you for being here. And thank you for the Super Chat. Again, incredibly grateful for this community. If you were to ask me what am I most thankful for, it's this, the fact that we're all here every single day, able to do this every morning and every afternoon. And, you know, it's not easy to build a community of people that like all are believing in sort of that same North Star, which I think for most of us is financial independence. And the way that we get there is a very topsy-turvy journey in regards to, you know, navigating the stock market, but having fun along the way, making real lifelong friends, being able to do the meetups, which, by the way, I think I'm signing the contract with my new manager next week. She's coming over to Jersey and we're going to officially sign the ink. And so, yeah, the structure of the meetups is, I think, going to, not guaranteeing anything, but I really do think we can take the meetups to a next level next year. And it'll be fun. And that'll only reinforce kind of the community that we've created. And, you know, we all have one life. And I think one of the biggest parts of life at the end of the day, something that we're all searching for is community, is some sense of belonging. No matter how much money you make, it's not fun if you can't really enjoy the money and the process of making that money with people you care about. So I think we'll try to continue that in 2026. Hopefully we continue to have a bull market and we'll keep navigating the markets every single day. It should be fun. New York should be the first meetup. It should be fun. Although I am thinking of doing it in February instead of January, because Steve made a good point last night. January 25th might be the AFC NFL championship game. And so we were trying to do it on that Sunday. And maybe we still have to keep it on that Sunday, but maybe a week later would make more sense on the off week before the Super Bowl. So we'll see, but I'll get you guys some more updates going into the new year. Probably early December. We'll have some updates. Yes, we will have a market close. So we'll still have a market close. And then that's it for today. All right, so that is it. Let's do word of the day. And then we are out of here. Again, thank you everybody for being here. We got to change the prompt on the word of the day because I think I gave it a prompt of like, give me super intellectual words. And every time I ask, it gives me like this abstract philosophical word. So we got to make a better prompt. Give me a word of the day. What's the prompt? What do we do? Because we've had like 7 or 10 of these like philosophical words every day. You still suck for not knowing Rocky. Give me a finance word. Give me a word of the day that is about finance, but not a basic finance word. Okay, let's see. This is actually kind of cool. Hold on. This is actually not a horrible idea. We'll actually learn something every day with this. Contango, a market condition in futures trading where the futures prices is higher than the expected future spot price, usually because of storage, insurance, or carrying costs. Give him a movie he needs to watch every day. Contango. Oil futures moved into contango, signaling that traders expect spot prices to fall in the coming months. Shout out to Michelle. That was a great suggestion. I like this. This is like, I could actually use these words every day. It's a legit jargon word. Yeah, I can say this in the midst of my vernacular as I'm ranting about a topic and just bust out a contango and just sound smarter than I am. The AI trade was in contango, 100%. There you go. Let me ask another question to ChatGPT. If I am live streaming to an audience and I say I don't know who Rocky Balboa is. Should I be embarrassed, or should the audience feel bad for making fun of me? Let's see what super intelligence says. Dude, ChatGPT, taking the easy way out. Honestly, neither. No, pick one. Don't take the easy route. Let's see if she glazes me. Let's see if I had to pay. Dude, I love AI. They're always on your side. They're always on your side. The audience, she obviously knows I'll feel better if she blames you guys. That's one thing I've noticed about these LLMs, bro. They always want to make sure you're feeling decent. Not in a dramatic way, but in the sense that mocking someone for not knowing a 50-year-old movie character is lazy humor. It's low effort chat behavior. Bro, she's roasting you guys. You're not expected to know every piece of pop culture ever created, obviously. They are expected to treat the streamer like a human being. Wow. So if one side has to be embarrassed, it should be them, not you. You missing Rocky Balboa isn't a flaw. Them acting like it's some type of moral failure is cringe. I think I'm going to upgrade to ChatGPT. You see how it says Get Plus? I might have to click on Get Plus. That was a hell of an answer. That was a great answer. Thank you so much. That's exactly what I was thinking. Dude, she roasted the crap out of you guys. Good, because you were so right. Rocky Balboa is like a cultural boomer test. Not knowing him in 2025 isn't a moral failing. It just means you didn't grow up in the 70s. If anything, your audience should feel a sting of embarrassment for expecting everyone to have encyclopedic knowledge of their era's movie. Wow. Guys, that's not me saying it. That's hundreds of billions of dollars of GPUs were trained to get that answer. What do you want me to say? If you're bullish Nvidia, you have to be bullish that answer. Because if it had a bad answer, then the Nvidia chips would be useless. That was a hell of an answer. And so if you think that is the correct answer, and if you're bullish Nvidia, you've got to believe that all that training was worth creating that type of a response. A moral failure. A moral failure is what she said. Okay, hold on. We do have to ask Gemini. Let's see if Gemini. Hold on. Let's see. We got to ask one more. She has Grok on Hinge too. Grok's gonna be like, "You're freaking stupid." Let's ask Gemini, dude. If we go 2 for 2. If we go 2 for 2 on this, let's ask Grok as well. Let me ask Grok. That was a hell of an answer. Okay, Grok said neither. I'm going to be like, no, pick one. They're trying to get the easy route here. Okay, let's see what Gemini does. Pick one, don't take the easy route. Grok said neither as well. Dude, all these LMs, they're saying the same shit. I'm going to tell it neither one. Or no, you have to not take the easy route. Dude, that was an incredible answer. Mocking someone is low effort chat. She said you guys are low effort. She said you guys have lazy humor. She said you should be embarrassed. You're going to let AI talk to you like that? I didn't say it. AI said, wow, Gemini, the audience should feel bad. Gatekeeping is cringe. Mocking someone for what they don't know is the lowest form of conversation. They are confusing famous with mandatory. That is main character syndrome on their part. And then pop culture is not an IQ test. Okay, can we go 3 for 3? Can we go 3 for 3 on Thanksgiving, Ian? Grok, the audience should feel bad. Gatekeeping a 50-year-old movie reference is peak nerd snobbery. It's like mocking someone for not knowing every Marvel character or Beatles song. Wow. This is why we buy Nvidia. This is why. Dude, I should, every time you guys make fun of me, we should just go to super intelligence. We should just go to super intelligence. You guys, I'm not saying it. I have said nothing. You guys saw my prompt. My prompt wasn't biased. I asked a simple question. Hey, I'm live streaming. I didn't know this reference. The audience made fun of me. Who should feel bad? And she tried not to say you guys, but then I said, no, if you had to pick, what would you pick? All three of them. I'm sorry, guys. This is just the nature of AI. It's the nature of large language models. If you believe in all these hundreds of billions of dollars of CapEx, you got to believe in these answers. So I love AI. Oh, I need to buy more Nvidia just because of this. I need to buy more Nvidia because of this. All right. Thank you, everybody. There needs to be what more context needs to be provided. I said I'm streaming. I said the audience made fun of me. You guys definitely made fun of me. I said who should feel bad? ChatGPT said you guys have a low effort behavior of lazy humor and you should be embarrassed. AI. That's why we buy AI stocks. All right, that's it. Thank you, everybody. Appreciate it. Again, thankful for all you guys. I will see you guys when the market close. We'll see if we can end out this green day. And yeah, we'll keep going from there if we can really get this 1% green. Wow, S&P 681. Goodness gracious, dude. If we can get that 680 close today, it would be very bullish to see. And it would be a nice end as we get into Thanksgiving. All right, that's it for me. Thank you, everybody. I will see you guys on the market close later today. Bye, everybody. Have a good one.